Yesterday, a slightly firmer day of trade as we wrapped up shop, but we had gains of about 0.25% on the Stocks Europe 600, breaking a 2-day losing streak. So at this point, it is shaping up for a 2-day winning streak. And let's switch over the charts and take a look at the sectors. Still a little bit of weakness that we have witnessed in the last 24 hours in the oil trade. That said, crude and WTI trying to stage a recovery morning session, and that's propping up the oil sector. Towards the top of the boards this morning, we've also had a big report of BP, and we'll take a look at that stock. It has seen higher from the outset. At the bottom, utilities, the defensive sector parked right at the bottom of the heat map, and it is still in the green, you will note, with that green arrow, which suggests a broad sweep higher for sectors today. Media stocks at 0.2 in the green. Food and drink still showing just a little bit of sogginess at this point. And AB InBev right at the bottom, still concerns around how this sector is going to weather the coronavirus, with breweries in Wuhan impacted. Also, the consumption story is seen as a loss for some of these industries. You won't necessarily get a pent-up demand story. It will simply be lost consumption at this point. Financials are trading higher by about 0.25%. Retail stocks nudging into the green. Chemicals, household goods, all trading strong. And if you look at this particular basket of stocks, it also houses a number of big luxury names. Burberry out in front, along with Dior, LVMH. So you are seeing a little bit of strength in those particular names. Technology, we've got a bounce of 0.7%. Every single banking stock at the start trades in the green. Oil and gas just giving up the top position, although BP doing a lot of heavy lifting in the space with a very strong move of 3.8% on the back of its numbers today. Basic resources out in front, and you will note the very volatile trade in futures around some of the core commodities on the Asian markets yesterday, as we saw some of the major indices return to the trading session on the back of the Lunar New Year break. Big drop in iron ore, copper, some of those trades. And this morning you can see a reversal in some of those losses as the sector bounces 1.4%. The indices, let's go straight to the FTSE, as we have had that drop in pound, 129.45 the handle. And it is a very supportive trade for the FTSE. That's a correlation, inverse correlation that exists when you see sterling drop. It causes that inverse prop for the FTSE 100, 1.1% gain. You can see well and truly outpacing the rest of the markets in Europe, and enough to reclaim that 7,400 foothold. Fears again lurking around a hard Brexit type of scenario, as we see the EU and UK spar over what sort of rules will be implemented at this point around a trade agreement. 0.5% higher for the French market. This market yesterday was up by just over 0.4%. Not a bad showing, outpaced slightly by the DAX yesterday. And you can see, again, that remains the case. In upbeat days, we are seeing the DAX pick up a little bit more momentum than what the French market is gaining at this point. The other ones, Spanish stocks trade firmer, 0.8, very decent trade versus the rest of the European indices, and also ahead for Italian and Swiss stocks. Want to get into those BP numbers. It is towards the top end of the range that the stock was seen spiking. We've got 3.7%, and that's minimising some of the losses we've witnessed over the last 6 months. Somewhat of a pain trade as investors continue to weigh up that demand story. First up, as we closed out last year, and some of the geopolitical events that were priced back into the oil price. But starting out this year, of course, coronavirus just damaging some of that fresh optimism that started to return in January for the oil trades. So let's get into the numbers. BP has beaten on its fourth quarter forecast, despite the British energy giant posting a 26% drop in quarterly underlying replacement cost profit on the back of weaker oil and gas prices. BP also announced it has completed a $1.5 billion share buyback program, adding it will raise its dividend. BP's latest earnings come on the back or on the final day of Bob Dudley's reign as CEO. Speaking to CBC, the CFO, Brian Gilvray, said the spread of coronavirus could cut oil demand by 300,000 to 500,000 barrels a day. Take a listen.
Coronavirus and what's happened in the last few weeks, which is really what's driving the prompt price down to where we are now, sort of 55 Brent. That could take 300,000 to 500,000 barrels a day demand out. That would still leave demand healthy at 700 to 800,000 barrels a day. And then I think in terms of price direction, all roads will then lead to what OPEC will do in terms of trying to rebalance the system to get back to something around $60, $65 a barrel.
Gilvray also says he doesn't see LNG prices having a major bearing on the energy transition.
Anticipated that it would be a pretty bearish market through 2020 for gas, and you're seeing that right now. It's a mild winter we've come out of, therefore Henry Hub's trading below $2 an MMBTU. That's having a knock-on effect effect in terms of gas that's moving to the Far East and to MBP here into the UK. I think you're going to see that certainly for another 12 months. By 2021, that starts to play out. You'll start to get back into balance in the system. So I think you'll see gas prices recover. I don't think it's that significant in terms of energy transition. I think energy transition is going to be over multi-decades.
Here's how the oil majors trade today. And just a bit of background, there are suggestions of an emergency meeting for OPEC, Russia and the likes of OPEC considering whether there should be more production cuts given the coronavirus. And that talk has just re-energized what we've seen on that oil price, cracking below 50, now back up above 50 on WTI this morning and 54 the level on Brent. Meantime, Chinese President Xi Jinping has described the infectious virus as a test of the country's governance, but reassured his citizens that his government has launched a, quote, people's war of prevention against the epidemic. Presiding over his second special meeting of the top Communist Party body since the outbreak, Xi also warned that anyone who did not perform their duties would be punished. Jeff.
Thanks very much, Karen. Anika Gupta has joined us, Associate Director for Wisdom Tree. Good morning and welcome. We should remind everybody Simone is still with us as well. You may want to jump into the conversation. So, very open question. Where's the money going at the moment?
Well, the money is definitely going into safe haven assets. We've seen money pour into gold. We've seen money pour into across equities into more defensive equities, such as quality-linked equity stocks. So I think that's where we're seeing the general flows go.
The trouble is you get a day like today and it feels like everything is being inverted.
Right.
And we came into the year with, I think, relatively strong tailwinds coming out of the fourth quarter of last year.
Yes.
Central banks still talking about easy monetary conditions here. And there does seem a desire still in this market to want to own risk. So what do we base the next phase for the markets on? The coronavirus story going away or strengthening? I mean, what's important as far as you see the big themes?
For Wisdom Tree, our view is that you're right. We started the year on a very positive note with the U.S.-China trade war seemed to be moving on the right steps. We've hit at least the phase one trade deal. But for now, I think the coronavirus spread is the new unknown that the markets are fearing. And we believe at least for the next 2-3 months, there's going to be more pain than gain. And there's a higher likelihood that investors are going to be investing in more safe haven assets as opposed to there being a more risk-on environment for now.
And Anika, we were discussing about the safe haven, but do you see any area of really undervaluation today? Because we are all starting from a very high benchmark. So from a perspective of the deal maker who thinks some of these companies should be in private hand versus public hand, where do you see undervaluation?
Well, the biggest undervaluation, and we've seen growth versus value. So there's been a tug of war between growth versus value, and ever since the great financial crisis, growth stocks are essentially trading at a premium versus value stocks. So if there's any undervaluation, we believe that's in the value bucket. So that's where we'd see the most opportunity.
Where in value is there value?
That's a very good point.
I just wonder because I look at the sector and I hear the argument about growth.
Yes.
And that's where is the value in the value?
Well, there are a number of stocks that you can pick within value, but right now...
Well, give me a sector then within value that you like. We'll dissect and play.
Energy is a sector that we do like. Energy is a value sector that is trading at a discount.
But energy is just a product, is a derivative, isn't it? Let's be honest about it. The energy IOCs, energy companies, they're just a derivative of that underlying oil price. And when you've got $50 WTI and low 50s Brent, it's quite tough to make a bull case, isn't it?
It is. It definitely is.
If we're losing a percentage point off Chinese GDP as well, potentially.
That's true, and that's why you continually see the growth versus value debate.
So is it a value trap, the value in value?
I don't think it's a value trap. I think just towards the end of 2019, we sort of saw this turning point for value. So value started gaining a massive amount of momentum, and you saw growth tapering off. So investors were slowly realizing, yes, there is opportunity in value. It is trading at a discount, and this is the time to get in. But I think now that we've seen this new
the director wants me to get the word value in as many times as possible, so I'm going to just tweak it with the word income. Right. So is the value in the energy sector, actually in the income side of the equation.
Yes,
as I say, BP just upping to 10.5 cents a share when they already had a 7% dividend yield.
You're right. So, we're living in an environment where you've got low income. So investors you've basically got virtually low interest rates. So everybody is looking for quality stocks and high dividend yielding stocks. And again, that favors the value bucket.
Yeah.
It's dangerous flirting with high dividend stocks, though, in these markets at the moment, isn't it? I mean, we were just talking about Orange.
Right.
Orange, even. You've got some of these telecom companies that have traditionally paid out reasonably high dividends, like Vodafone. And yet they cut.
I've just seen BT sitting very low as well.
That's right. That's why at Wisdom Tree, what we try to do is we try to put in a filter where we're essentially looking at quality stocks. So within that filter, you'd go for stocks where you don't have a dividend cover ratio, which is below 1. So you make sure that the company is not paying more than they're actually making. So that's one thing that we try
and remove some of that vulnerability.
Absolutely.
But it is a challenge at times because, coming back to Steve's value point, that does appear to be where the market opportunity lies, given the way that you try and do your discounted cash flow model against the current cost of cash.
True.
And so you've got to be very selective, it seems. So apart from energy, what else do you like sector-wise?
From a sector perspective, we're right now we're more focused on geographies. So from a geographic perspective, we're looking at US still seems very attractive. The US markets seem attractive. We still favor emerging markets. We think that's another, we've been saying that for a while. It has had a fantastic year in 2019. We still think there's opportunity there.
It's had a terrible decade, though, hasn't it?
It has, exactly.
Huge underperformance of emerging against developed.
Yes.
What is the catalyst for repricing emerging to reflect the gains that developed has already had?
Well, the main catalyst is a weaker dollar. Interest rates, the Fed essentially being on a more dovish bias, so that again favors emerging markets. And I think the growth premium that always stands in their benefit. So emerging markets have a much better growth advantage versus developed markets. And last but not least, productivity. So they're actually a lot more productive right now versus the developed economies.
Can I ask you about the tech names that we've been discussing this morning on the back of what we've seen from Alphabet? And there's still got this dominance of the major 5 stocks, Apple, Microsoft, Amazon, Alphabet, Facebook on the S&P 500. Do you see that changing, that leadership that we have witnessed from technology this year? Because when I've seen some of the action on the back of coronavirus, it looks a lot like other volatile periods where as soon as you've got risk on, investors march straight back into technology because they're guaranteed to the growth rates, even if they are a little bit lower than what they would like in the past. They still know that these stocks are going to grow. Do you see that changing at all in 2020?
No, I think investors again want to see strong numbers, and you've seen Microsoft beat on their earnings expectation. We've seen Amazon beat on their earnings expectation. So these big heavyweights are still going to dominate the market as long as they deliver on their numbers, which very few companies are doing today. They're still going to definitely be in favor.
Anika, thank you very much. We'll pick up the conversation in just a bit. I want to take you to the brewing company, the Danish company Carlsberg, which has posted a solid set of fourth quarter results boosted by growth in Asia. Net profit rose to 6.5 billion Danish kroner in 2019. That was ahead of analyst estimates, but the company is cautious around its 2020 guidance, citing a more volatile environment, including the coronavirus outbreak in China and competition in Russia. Carlsberg added that it is too early to tell the full impact of the virus. You can watch our first on CNBC interview with the CEO, start at 11 a.m. CET.
Boom, boom.
First, yes. That's what it should be.
Freudian,
rebrand,
first.
Yes.
First on CNBC.
First on CNBC.
Reaching the parts that other presenters don't get to.
Was that them?
I think it was.
Wasn't the other lot, was it?
I think it was.
Wasn't the Dutch lot?
I think it was...
the Danes.
The Danes, yeah.
Okay, fair enough.
Wasn't it?
I can't remember. I don't drink lager. It's not my cup of tea.
But you do watch television.
I no, very rarely actually. Certainly not the adverts.
Well, grab a nice cold beverage at 11 CET and tune in. Airbus is facing a series of fresh investigations around the world after agreeing to pay a record $4 billion in fines in the UK, France and the States in a plea deal over bribery and corruption allegations that span 15 years. The chairman and CEO of Malaysia's Air Asia both stepped aside on Monday amid ongoing probes involving Europe's aerospace giant. Meantime, inquiries are being made on similar accusations in countries from Ghana, Sri Lanka and Colombia.
Right, coming up on this magnificent program, spelling it out, Alphabet unveils sales figures for its YouTube and cloud units for the first time ever. We will break down the numbers coming up next.
Right now on CNBC Make It, Supreme Impact, how marketing magic turned a small underground street brand into a billion-dollar global phenomenon.
And in our ADD culture, that logo breaks through instantly.
On CNBCMakeIt.com.
Started with working with Policy Genius to figure out what plan would work for me and if it was true that I was paying too much. I saved about 20%. Not only did I save 20%, but I got extra coverage. It just feels like I could take a deep breath and sleep well at night.
We are the dreamers. We come in a variety of colors
and styles,
a variety of sizes.
We come in different patterns
and different materials.
We are the dreamers.
Achieving your dream can take work.
I just wanted to do a career.
But don't give up.
Changing my life.
Don't ever give up.
Ignore the haters.
They didn't believe that I can do it, and I just proved them that I can.
Independence University.
IU is an online college.
Education online for a better life offline.
So your campus is wherever you want it to be.
Take classes when you want to take classes.
At IU, you receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
You're going to keep that laptop and tablet when you graduate.
And IU's career services work really hard to help you get a job.
You've got to have dreams.
Independence University.
Education online for a better life offline.
1-800-967-0542. 1-800-967-0542.
Now get greedy whenever you want. Subscribe to the American Greed Podcast and take your greed to go.
Crime absolutely pays, and it pays a lot.
Some people will do anything for money.
The American spirit, inherently competitive, always driven with a hunger, ambition, and an appetite to succeed. The pursuit of prosperity can be unpredictable and thrilling. From breakthroughs to breakdowns, the launches and the crashes. Perseverance is paramount. Knowledge essential.
Good morning, everybody. Welcome to Squawk Box here on CNBC.
That's what drives us. It's in our DNA to provide the information you need wherever you are to propel your dreams forward.
Welcome back, everybody. Let's pick up here and bring you some data from Kantar. This is the organisation that compiles supermarket information here in the UK. And the headline here, Britain's supermarkets see a weak start to the year, according to Kantar. A subdued start with all the traditional Big Four supermarket groups seeing year-on-year sales declines in the latest 12-week trading period. Total UK grocery sales rose just 0.3% in the 12 weeks to January 26th. Some people apparently did dry January. So alcohol sales impacted, and there are others who also foregone meat.
And dairy.
Decided to not eat meat
you just,
and dairy.
Just pick on me for 5 minutes. Did I miss the strap at the bottom of the screen?
You've self-identified now.
Self-identified.
I didn't use your name at all, but you are one of those who did Veganuary.
My grocery bill hasn't gone down. Let's go there. I have been one of those thematics that Cyrus was talking about on the food front. My grocery bill has not gone down. If anything, it's gone up.
Your basket size has widened out.
My basket size is definitely... Absolutely. The alcohol's gone. But I mean, putting the fresh produce in there, I don't know, Mrs. Sedgwick must be buying some very expensive organic food, is all I can say.
On a more serious note, do Sainsbury and Asda market share ever go up? I mean, they've always been reversing. And what we had was that key decision by a regulator that their market presence was too great, therefore they should not be allowed to consolidate. I wonder if the regulator looks at these numbers, the Kantar market share numbers, as they come out.
Well, isn't it interesting? I mean, you remember we had that phase where we talked about whether discounting and economy purchasing would become embedded in the psyche of the UK consumer post the financial crisis. And the argument at the time went backwards and forwards that no, it would be temporary. While people had some pain on their pocketbook, they would go to Aldi and Lidl, but they would ultimately come back to the main four when they felt a little wealthier. Well, it hasn't really worked out that way, has it? Because as you continue to point out, and as you look at the data this morning, Aldi UK sales up 5.7%, Lidl UK sales up 11.1%, and it is the traditional four who are losing market share as a consequence of that. So it does feel as though value shopping has become embedded in the minds of the UK consumer.
Where's the opportunity? Is there anything in retail that your customers are telling you or that you're spotting from the market that is interesting in retail or anything consumer facing?
I think in retail it's more the specialist type retail versus the big supermarket brand, and then online now is the name of the game. When you look at UK retail, one of the best performing stock is Next.
Yeah,
and it's not for the style of the clothes probably, but because of the online presence, which is high. Next. No, it's my Italian in me coming out, but I favor Italian brands. But it's really because of online. So that's, I think,
big
digitalization.
Fan of Gavici myself in the 80s. Was that Italian or was that just?
Just sounded.
Was it one of those faux Italian brands? What about yourself?
I agree. I think it's mainly online. I think. People today barely have any time, so they're going for only two things. They want a discount, and they want it very quick. So if you can give them that service as quickly as possible, which online is delivering, that's what they're getting. And investors are just not convinced with the, bulk four main supermarkets, because Lidl and Aldi just keep grabbing market share. So they don't want to be in the, in the other four, which are continuously losing.
We've got to push on back to the technology conversation, and Tesla, one stock we're eyeing for you, as shares skyrocketed almost 20% on Monday. This is after Panasonic's US battery business, a key supplier at Tesla's Nevada Gigafactory, posted its first quarterly profit. Panasonic shares jumped on the back of strong earnings. Yesterday's move marked the biggest single-day gain for the electric car maker's stock since 2013. Tesla was also supported by a bullish call from ARK Invest. I'm not sure you can call this bullish. They're calling about $15,000 on the stock as their bull case, so jumping tenfold over the next 4 years. Tesla shares are now up some 300% since last summer, thanks to better than expected earnings and a ramp up in production at its Shanghai factory. And Alphabet, the other big one, as it posted its slowest fourth quarter revenue growth in 5 years, missing estimates. The Google parent results were impacted by an underperformance in its YouTube unit and its cloud services business. However, profit for the period rose by 20%, beating expectations.
The president of the Atlanta Federal Reserve, Raphael Bostic, says the spread of coronavirus has not changed his outlook for the year. Bostic's comments come as traders begin pricing in another Fed rate cut by the summer. Did they not see the manufacturing data yesterday? Anyway, okay, maybe one's looking backwards, one's looking forward. Anyway, they've begun to price in a Fed rate cut by the summer amid market jitters prompted by the outbreak of the infectious illness. Market jitters, we're down 3% on the US from record highs. However, the Fed president added that last year's 3 cuts provided, quote, a lot of stimulus for where the economy was, making it more resilient.
The Bank of Japan has weighed into the whole coronavirus story. The governor, Haruhiko Kuroda, has warned that the impact from the coronavirus on the Japanese economy may be big due to China's large economic presence in Japan. Addressing Parliament, Kuroda voiced his concerns about the outbreak, saying the central bank is paying, quote, maximum attention to the virus's impact. Anika, let's just come back to you. Japan is an interesting story because it seems to divide the analysts at the moment. Those who believe that there is a rebound coming in growth later this year, and those who, quite frankly, have just kind of given up for the time being until they see real evidence of activity. What are you seeing as far as Wisdom Tree is concerned?
Well, our view is that a lot of comparisons have been made between the coronavirus and SARS. Now, SARS took place in 2003. Back then, as far as the Chinese economy was concerned, consumption was just 40% of the total Chinese economy's GDP. Today, it's 70%. And consumption is going to be the first thing that's going to be impacted, be it retail, be it travel, all of these basic sectors that actually affect the consumer, they're going to be dented owing to the coronavirus. So we see the impact, at least short term, will be quite severe going forward. The other very important thing is, yes, the Chinese economy 14 years ago was a lot smaller, but it was growing in double digits. Today, the economy is growing a lot, growing a lot slower, and however is much larger. So we still see the impact as being quite severe on the Chinese economy for the near term.
Markets like to see a script that they're used to, and what we've had already, formulaic moves by the PBOC to try and inject liquidity in the system.
Yes.
Banks are already saying, hey, we're going to get more fiscal spending, fairly decent budget from the Chinese authorities. So aren't we just going to see a response straight up to these Chinese measures? We've seen it on Wall Street when there's a script that investors know how to trade.
Yeah. So on Monday we saw, overnight we saw the PBOC come in and inject liquidity into the economy. They've even cut rates. Now the market is actually, expecting, given the severity of the virus, the market is expecting more fiscal stimulus. But I would caution that the Chinese economy is still quite strapped. They've got a high debt burden, and it won't have as much of a stimulatory effect as compared to back in 2003. And the other thing is, we've already seen a lot of fiscal stimulus being pumped into the economy in 2019. So there's less wiggle room for them at this current point in time.
I think we've got to leave it there. What a great shame. We've had a lovely chat, but thank you very much indeed for joining us, Anika. Very nice to see you.
Thank you so much.
Anika Gupta has joined us from Wisdom Tree, where she is Associate Director, and you get to stay with us. Oh, how lucky. Right, let me just tell you that the pound, dear old pound sterling, trading at 129.64, just come off its 6-week lows. What's going wrong there? Anyway, we will discuss on the show the Brexit battle as the UK Prime Minister Boris Johnson, he of the tousled hair, threatens to walk away without a trade deal with the European Union. Quelle surprise, as they say in Germany. Find out what the main sticking points are after the break.
Is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you get some useful information.
Squawk Box, weekday mornings, 6 Eastern, CNBC.
By choosing Policy Genius, we were able to compare many different policies in a very short amount of time. They were able to kind of navigate me to the right policy. My husband and I feel very much at ease now that we know that our family is taken care of.
Hi, I'm Joan London with A Place for Mom. Over the years, we've helped thousands of families find senior care, and today's senior living communities have never been better, with amazing amenities like movie theaters, exercise rooms and swimming pools, public cafes, bars and bistros, even pet care services. And nobody understands your options like the advisors at A Place for Mom. These are local expert advisors that will partner with you to find the perfect place and determine the right level of care, whether that's just a helping hand or full-time memory care. Best of all, it's a free service. Call today. A Place for Mom. You know your family, we know senior living. Together, we'll make the right choice.
Call A Place for Mom right now to get our free ebook on financing senior care, as well as a free referral for senior living communities in your area. Call 1-800-536-7580. That's 1-800-536-7580.
Had either of you ever invented anything before?
Nothing.
We went from 5 employees to 500.
Strange Success with Jane Wells. Subscribe to the podcast now.
I've been here at the stock exchange for 20 years, and in that time, I've covered every crisis. I've met everyone I ever wanted to meet in my life because they come and ring the opening bell. I just go to work, and the world comes to me. IPOs are my favorite thing to cover because it's capitalism in action. Want to talk about the biggest IPO of the year, that ZTO Express? They priced it aggressively. That's the bottom line. My job is to try to make sense of the global economy. I'm sort of like the weatherman for the stock market.
The mission of Impossible Foods is to completely replace the use of animals in the food system by 2035. Animal agriculture occupies 50% of the land surface of Earth. Every product that we make using animals can be made more delicious, nutritious, and more affordable, and vastly better from an environmental standpoint by switching to plant-based food production. We have work on fish and dairy products. We can innovate. The cow can't innovate. This is the future of business. I watch CNBC.
As you can see, a substantial rally going on. 9 out of 10 stocks for European equities. They're joining the relief rally as Chinese stocks rebound from yesterday's sharp losses. But risks remain as the coronavirus death toll now tops 420 amid more than 20,000 cases confirmed. BP investors cheering the fourth quarter beat despite a key profit reading falling 26% on weak prices. We have got a dividend increase though. The oil major's CFO telling this show it's too early to assess the impact of the coronavirus outbreak.
Coronavirus and what's happened in the last few weeks, which is really what's driving the prompt price down to where we are now, sort of 55 Brent. That could take 300,000 to 500,000 barrels a day demand out. That would still leave demand healthy at 700 to 800,000 barrels a day.
Investors finding the fault with Alphabet, selling the stock on a mixed set of numbers and disappointing YouTube data, whilst Tesla, meanwhile, enjoys a 20% spike. 20% one session. Shares making their biggest one-day gain in 6 years. And oh my, Democratic candidates voicing their outrage as the results of the Iowa caucuses are delayed. But Pete Buttigieg makes a late-night speech saying he's confident he's leading the pack.
Tonight, an improbable hope became an undeniable reality.
Welcome back, everybody. We've just got some numbers coming through from the Hong Kong government on retail sales. December retail sales down 21% by volume from a year earlier. When it comes to the value, down 19.4% by value from a year earlier. Just an update on the position in Hong Kong. Obviously, the coronavirus will bleed into the January numbers, one imagines, but those weak December numbers are a reflection of the impact of ongoing protests against the government in Hong Kong. Karen.
Yeah, thank you. I want to take you through some of the action we're seeing on European markets this morning. Very strong trade for the FTSE, which was going to be the case from the outset, as we saw that weakness in sterling below the 130 handle, or 129.6 at this point, picking up a little bit of action at the margin, but still fears around the negotiations taking place between the EU and UK around a trade agreement and just how aligned goods and services will be at this point. That's knocking confidence, but the inverse correlation exists yet again between weakness in sterling, firmness in the FTSE 100. That market trading up by about 1.5% versus about 1% on the French market and the DAX as well. So outpacing to the upside, but decent gains still. You can see in a snapback day for investors as they repriced markets again on the back of coronavirus. The gains we saw in the Asian markets, stabilization in the Chinese share market has been welcome. Also gains on Wall Street, another component to throw in. Some of the earnings and BP, one of the strong outings today we've seen from a stock as it's hit the tape. Let me show you the individual sectors and you can see how this green spills across the boards. Right across in lockstep by sectors we are seeing gains from basic resources, which had a very rough session yesterday. A lot of the futures contracts that are trading on the Dalian exchange yesterday returning to session. Very weak, low liquidity, but still having an impact and bearing on the basic resource stocks here in Europe as they traded. Oil and gas, it has again been a volatile 24 hours. We've seen a drop below that 50 handle on WTI. Since then, there's been a lot of chatter about an emergency meeting by OPEC Plus, and that's put a bit back into the price of oil from WTI to Brent to the energy sector today. At the bottom end, you can see utilities firmer, travel and leisure only modestly in the green. Still a lot of uncertainties around how coronavirus will impact the sector and demand this year. Let's get into what we're seeing by stocks, the individual names. NMC Health, very volatile one on the UK stock market at this point. A whole heap of explainers being issued about some of those share price fluctuations, but it is a day to the upside today for that stock. Iliad in the telecom space in France trades up by 4.6%. Some of the weaker ones today, Pandora in the retail space trades down by about 4%, and you can see Micro Focus down 14%, the weakest one on the boards for the UK stock market as well. Jeff.
Karen, thank you. Huawei and ZTE have urged the US Federal Communications Commission not to designate them national security risks. This after the FCC voted back in November to block US carriers from buying equipment from these two Chinese tech companies using government funding. In a filing, Huawei accused Washington officials of imposing, quote, stigmatizing restrictions, while ZTE said it had spent hundreds of thousands of dollars to comply with US regulations. Moody's says the coronavirus outbreak will hurt China's economy by curbing consumption. The ratings agency is warning there could be a significant fall in revenue and profit at Chinese companies for several months. Despite the worries, Moody's says Beijing has the financial resources to absorb the impact of the virus.
The outbreak of the coronavirus has led the case for a tactical reduction in exposure to China within small and mid caps, according to JP Morgan. Joining us now, Eduardo Lecubari, who is the global head of small and mid cap equity strategy, JP Morgan. I want to start this a little bit micro first up, because you've got 192 stocks that you highlight as being most exposed to China, and they're called Western Dragons or Western Tigers. And going through the list is just extraordinary. Copper. A couple of names in the copper space. And I know that's been a real red flag for investors in the last 48 hours as we've seen the return to trade in China. Just give us a sense of how you weigh up those exposures right now.
Yeah, so I think when people try to think about Asia right now and what is most exposed, the usual thing is to look at revenue exposure, and that's one of the things we do in the report. But I think there is another way of finding those kind of exposures, which is correlation. So in the report, we look as well at European small and mid caps, where the share price has a very significant correlation with China's PMI, which is perhaps a new and different way of looking for where your trouble may be.
How long do we need to think about the hit for some of these stocks? And it goes across the industrial space to machinery, electrical components and equipment. Because what we've seen has been shutdowns in various factories at this point. Workers asked to stay at home. And if you've got components coming out of production facilities and linked to that PMI, you've got to say there's going to be a hit at least March and April at this point. Does it go on for longer?
I think it's hard to tell, because we've seen, how this starts. We don't know how this is going to end. Common sense kind of dictates that this is probably a short-term, temporary drag to growth. But I think what's important of all of this is to understand what January is really telling us about what 2020 is going to be like. And to me, what it says is that, look, you had the expected improvement in business sentiment that the bulls were calling for, and yet you lost money in equities in January in a completely risk-off environment. And that to me is because when you have very small margin of error, and that's where we are today with valuations where they are and expectations of growth where they are, any deviation from picture-perfect conditions is going to shade the market. And that's what we're seeing, and it's going to last for a little longer, I would think.
The overweight on LATAM, I think, is fascinating at the moment. Brazil seems to be everybody's darling right now, but year to date the performance has been lower, but I guess that's a reflection of what's happened on a lot of markets. But given where we've come from already in Brazil, do you think there's a lot of juice left in the tank for this market to grind higher this year?
I think so. So if you look in the wall of Smith at year-to-date returns, the best region so far this year is LATAM. Last year it was one of the best as well. But I think what's perhaps not understood by the market in general is there is this sense that emerging market is risk. And perhaps sitting here in what many think is late in the cycle, there is a bit of an aversion to risk, where this is a fact. The average small mid-cap in LATAM lost you less money than the average small mid-cap in the US in each of the last 3 US recessions, right? The only thing that tends to be a problem is the currency. And this time around, we're heading towards the end of this cycle with the dollar having had already years of up. So perhaps the currency this time around will be less of a problem for LATAM.
And Eduardo, can I ask, and we talked a lot today about growth on one side versus the dividend yield that BP is posting. When you look today as the value creation for investors in terms of dividend on one side and stability and on the others, value appreciation coming from growth.
Yeah.
Given what we are seeing in the world, do you think you can see this balance shifting towards maybe more conservative, old economy type of stocks? Or do you think growth will still have a big premium?
Yeah, so I think that's an excellent question. In fact, I think every year the real money-making opportunities are in the part of the market that is 3 sigma away from the norm. And if you ask me today, that's growth and growth expectations and how they're being priced, right? So take European large caps, for example. The 20% expected to grow earnings the fastest this year are trading on an average PE of 57 times, giving you 21% earnings growth. If you assume that 21% earnings growth comes through, and it comes through every single year, you're going to wait 7 years for that PE to come in line with the market. So I would side with you. I think growth is way overdone, at least that kind of recognized growthy names that are very pricey. I think that is a very dangerous part of the market today.
Growth revalues, if you are right. Given the herding of investors, that's going to be pretty painful for a lot of people, both trading in their cash, but also trading on margin as well. Is that going to drag down the more illiquid names that you are covering, that you cite, that you like, as aggressively, if not more? Because the investors have their money in those companies you just cited.
Yeah. So the good news about our business is you can go back to history, you can look at facts. Okay, so here is a fact. If you go back to the 2007 to 2009, the part of the market that was less liquid lost you less money. Here's another fact. If you look at, those growthy names that today are commonly perceived to be where you want to be, given that we are in a wall of slow growth, right? You look at the last 20 years of Japan, and every year you bought the highest decile of expected earnings growth stocks. You lost money almost every year. You did that in Europe since 1990. You lost money almost every year. So today the market is piled up on things that in theory is where you want to be, that historically have been a very painful trade.
Wow.
The interesting question is how you get the appropriate exposure for this year, because a lot of our audience will dabble in ETFs for passive exposure, and they may look at something like the MSCI mid-cap emerging. The trouble is, as they look at that, they'll find that gives them China, Taiwan, South Korea, a bit of South Africa, but predominantly it's Asia. There's a decent chunk of Brazil in there, but you don't get much other LATAM exposure. So what's the most appropriate way then, if people buy into your view of getting that opportunity?
That's right. So I think every year, there are years when the opportunity is clearly in terms of countries, or clearly in terms of sectors. And there are years, and I think this is one, where the opportunity is really at the stock level. So my recommendation is look at stocks, forget about directional views this year, and focus on things that have expectations that seem achievable, valuations that perhaps are not that demanding, and a business that is not that dependent on the macro. And I think that'll be a safe place to be.
Can I ask you about the currency effect? We're in an election year, and there was a suggestion that if there's a Bernie Sanders leaning poll that's coming out before November, then that could start to destroy the dollar strength that we've witnessed, because at this point nothing is really knocking the dollar off its perch. What would that mean, and do you think it's likely to happen? Would that have an impact on the LATAM trade?
Absolutely. So clearly the dollar going higher is not good for emerging markets, and it's certainly not good for global growth overall. And the dollar, as you well pointed out, it seems to just keep going higher, right? To me, what is perhaps more telling about that is the dollar is going higher because there is a perception of risk. And what's interesting is that perception of risk is not being represented in many parts of the market. So equity volatility is near lows. CDS spreads continue to contract. US high yield rates are near lows. The market seems very complacent when a part of the market is telling you we'd rather bet on the dollar because things are not all that great.
And the only thing that could destroy that would be some domestic politics, which is very US-centric.
Yes, the problem is if domestic politics don't work in favor of the economy, the US is 25% of global GDP, so that's not going to be good for the global environment.
Let's squeeze one more question in for Simona.
Eduardo, you made a very interesting point about performance of illiquid stock.
Yeah.
Now, I cover the private equity industry, which in the last 2 years has benefited from this big shift from public to private market. Do you think all this macro uncertainty will accelerate that trend, i.e. we will see more investors looking for illiquidity in private equity and shying away or disinvesting from public market?
So I think you probably see more of that. I think you've seen a big change already. But I really think we are facing the wall of investing at a time when it really needs to change, right? So perhaps the last 40 years was all about buying into large cap stocks. I think today that part of the market is driven more, as you mentioned, by ETFs, by passive. And the real opportunities are going to be in the less efficient parts of the market. That's the small mid caps, that is private equity perhaps as well.
Okay, we have to leave it there this time. The director really annoyed me. Always so angry. Eduardo, lovely to see you. Thank you very much indeed for that. Eduardo Lecubari, who is the global head of small and mid-cap equity strategy at JP Morgan. Right, let me tell you what's coming up. Confusion, basically, reigning as the Democrats' first round of caucus results. Well, it's still happening, really. We haven't got them yet. They're delayed due to inconsistencies. More when we come back.
The CNBC app has new features just for you with real-time market data. And now you can watch CNBC live with a daily free preview. The CNBC app. Download it today.
Started with working with Policy Genius to figure out what plan would work for me and if it was true that I was paying too much. I saved about 20%. Not only did I save 20%, but I got extra coverage. It just feels like I could take a deep breath and sleep well at night.
We are the dreamers. We come in a variety of colors
and styles,
a variety of sizes.
We come in different patterns
and different materials.
We are the dreamers.
Achieving your dream can take work.
I just wanted to do a career.
But don't give up.
Changing my life.
Don't ever give up.
Ignore the haters.
They didn't believe that I can do it, and I just proved them that I can.
Independence University.
IU is an online college.
Education online for a better life offline.
So your campus is wherever you want it to be.
Take classes when you want to take classes.
At IU, you receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
You're going to keep that laptop and tablet when you graduate.
And IU's career services work really hard to help you get a job.
You've got to have dreams.
Independence University.
Education online for a better life offline.
1-800-967-0542. 1-800-967-0542.
Start your day earlier and smarter. On top of the news.
Political turmoil in the Eurozone heating up.
Global markets.
Stocks rebounding.
Ahead of the game.
Time for this morning's big money stories.
Brian Sullivan, Worldwide Exchange, 5 a.m. Eastern on CNBC. The American spirit. Inherently competitive. Always driven with a hunger, ambition, and an appetite to succeed. The pursuit of prosperity can be unpredictable and thrilling. From breakthroughs to breakdowns, the launches and the crashes. Perseverance is paramount. Knowledge essential.
Good morning, everybody. Welcome to Squawk Box here on CNBC.
That's what drives us. It's in our DNA to provide the information you need wherever you are to propel your dreams forward.
The British Prime Minister, who goes by the name of Boris Johnson, but he has threatened to walk away without a trade deal with the European Union if Brussels insists on the UK having to accept EU standards. Ad lib sterling, 129.65. Willem joins us round the desk with more. Willem, the Dominic Cummings rulebook says always threaten to walk away because that's what Mr. Trump's done and it'll work for us too.
Well, in a sense, last year the UK threatened to walk away from discussions about the withdrawal agreement.
And then gave in over Northern Ireland.
And then, to some extent, Boris Johnson as Prime Minister and his team got what they wanted, which was an agreement within a time frame people had said
it's
wasn't
like my
possible.
children with candy, as our American friends would say. Give them too much candy and they'll keep asking for more.
These are your similes, not mine, Steve.
Okay.
No, what's interesting, I think, is that we had this opening salvo from both sides yesterday. Michel Barnier speaking in Brussels. Minutes later, Boris Johnson speaking at Greenwich, former Naval College there. A symbol, he said, of Britain's former trading opportunities.
Symbol because we've got no Royal Navy anymore, yeah?
Right,
yeah, okay.
right. More to do with the colonial history and trade in the 1700s. Some critics would say that's not quite so relevant now because the world's a bit more interconnected than it was at the time. And one of the challenges is that the UK government wants a Canada-style free trade agreement, but they signed up in the political declaration a few months ago to the idea that because of the closeness, geographical proximity between themselves and the EU, they weren't necessarily going to be able to get that kind of deal. And that's why the British government now crying foul, saying, well, we shouldn't have to accept the enforcement of rules by the Europeans.
Yeah, remind me how the 1790s ended as well. It ended with the 1800s, of course, and during that period we had an extensive actual shooting match with the continental system of Napoleon for 20 years. So it didn't end that well, did it, last time we trumpeted the British independence from the European continental system?
Cycles of history, let's call it that. I mean, look, this is obviously a very, very important project across Europe that has arguably helped maintain peace across large parts of that continent. I don't recognise the idea that because Britain strikes out on its own on a trade policy, it's necessarily going to lead to anything in terms of hot war. But this is clearly going to be a conflict over the next 11 months in these negotiating rooms between the two sides, arguing over market access versus regulatory alignment. And it's no easy answer to that conundrum.
Yeah, you're right.
That's what how important bravado is at this point, because if you look at sterling trade, 129.66, arguably would be even lower if the Bank of England had cut rates. So some of the prop you're seeing is thanks to Mark Carney's parting gesture at the central bank. I mean, we were at, 120 at some point mid last year. We've travelled a long way up on hopes that there will be some form of a smooth exit. Isn't this just sort of papering over the cracks that might be evident if we had that rate cut?
What we heard from Boris Johnson yesterday was once again an attempt to show that he'd be prepared to leave at the end of this year now with what he calls an Australian-style deal that is really a synonym for no deal.
Hang on, synonyms and similes? What are you doing? Turning this into a grammar lesson?
Yeah, it's
my inner classicist. I can't help it.
It may be quite dull, and I'm sure everybody remembers the numbers, but is it worth just reminding people at this point of the size of the surplus that the EU enjoys with the UK? So what is the current trade deficit? £66 billion, I think, for 2018.
And what's really interesting is to look at the differences when it comes to goods and services and how that would be affected by a Canada-style deal in particular. That's something that, again, will be a big point of this argument, is how goods are dealt with when it comes to a future trading relationship versus services. And, of course, UK, heavily services-led, that's going to be a real point of contention.
Got to wrap it up?
We didn't cover metaphors. Dang. Thank you very much indeed for that. Hey, Mr. Parr, my English teacher. Anyway.
The Democratic Party of Iowa says the results of its caucus will be released later today. This after a new reporting system led to serious delays in counting the result. Chair of the group, Troy Price, said the issue was not due to a hack, adding the party is manually verifying the data to ensure accuracy. Democratic candidates from across the field called for an investigation into the delay. In a late-night speech, Democrat hopeful Pete Buttigieg was confident he was out in front.
Tonight, an improbable hope became an undeniable reality. We don't know all the results, but we know by the time it's all said and done, Iowa, you have shocked the nation. By all indications, we are going on to New Hampshire victorious.
Let's get back to Simona, who's with us this morning from UBS. Simona, we were just talking about the UK and this ongoing row around trade. I just wonder, as you continue to talk to your clients about their activity and their plans, whether this issue has slipped out of the conversation or whether it's still as relevant as it has been over the last 3.5 years.
if you remember last time I was here, we talked about JOMO versus FOMO, the joy of missing out in the UK versus the fear of missing out. And I think there is a lot of pent-up demand in the UK. I think everyone was on hold waiting for the result of the election. In theory, we should be now in a more stable, more predictable environment. But the reality is the next 11 months are going to be hard in terms of M&A and in terms of deal activity. So I think probably in the first 6, the only opportunity we see are in public to private, in taking some of the companies that are a bit undervalued in the public market in private hands. But otherwise, I think there is still a lot of concern on volatility that we expect until the result of this negotiation is finalized.
Are you saying you're not seeing those animal spirits? I mean, there was this view that they'd been unlocked on the back of the election. You're saying they're not evident in the PE world?
Not yet, because I think there is still a lot of uncertainty. The next 11 months are going to be tough. And depending on the news flow, I think the stock market will react very quickly. The sterling will react very quickly. So it will still be a tough environment. There will be opportunities. So all the PE community is focusing on the UK, but it won't be easy.
We have to leave it there. Simona, thank you very much indeed for joining us. Simona joined us where she from UBS, where she is the co-head of Alternative Capital Group. Well, unlike the Democratic caucus, which is still ongoing due to its inconsistencies, Squawk Box, despite its inconsistencies, has to finish now. Coming up next, Street Science.
Anytime, any place. Watch CNBC Primetime live.
Yeah, baby!
Catch up on demand on the all-new CNBC app.
There's unbelievable technology here.
Easier than ever to find the shows you're looking for. Discover new ones.
This is amazing.
Wow. Go behind the scenes.
That's why I watch CNBC.
Plus, access to CNBC podcasts. Right now, 10-minute free preview every day. Now available in the App Store.
The hottest new razor is taking the men's grooming world by storm. And if you don't have it, you need it. Micro Touch Solo, the hyper-advanced full-body razor that trims, shapes, edges, and even shaves with micro precision. And it's totally safe to the touch. Go solo for full-body control with one tool. No nicks, bumps, or ingrown hairs. Edge beards and goatees with one touch. Clean your neck, barber shop perfect. And check this out. Snap on the guide to tame growth and perfectly shape your full beard. And keep new growth stubble trimmed exactly to your style. And look, the Solo Full Body Groomer trims precisely the length of hair you want. Snap off the guide and remove unwanted hair anywhere in seconds. What makes Solo different than your ordinary razor? Dual-sided German stainless steel blade. Shave up or down at 200 microstrokes per second. The Ultra Flex pivoting head contours perfectly to you for precise results. 3 custom grooming guides for control of exact length and shape. And a built-in LED light so you never miss a spot. Solo is so precise, you need no creams, no soaps, and no water. Ditch the old man clippers and toss the scissors. You've got to go solo. Call 1-800-956-5958 or go online at microtouchsolo.com and get yours now for only $19.99. Complete with German stainless steel blade, pivoting head, built-in spotlight, and 3 custom grooming guides. Everything you see here for just $19.99. The all-new MicroTouch Solo Full Body Groomer. The one tool that does it all.
It's time for a special announcement from Four Seasons Sunrooms and Windows. Transform your home and change your life with a Four Seasons sunroom. And watch this announcement until the very end for a special code for exclusive additional savings. And now it's time for Four Seasons. It's time for family gatherings, to stretch imaginations, to get together or find some time alone. It's time for a Four Seasons sunroom that lets you have it all for less money than you thought. Right now, for a limited time, all Four Seasons sunrooms are up to 25% off, with no money down and no interest for 12 full months. Call Four Seasons today. Four Seasons. It's time. Thanks for watching. Now call the number on your screen and mention the special code TIME and receive exclusive additional savings on your new sunroom.
Good morning. Welcome to Street Signs. I'm Joanna Bersecci.
And I'm Juliana Tattlebaum. These are your headlines.
European equities joined the relief rally as Chinese stocks rebound from yesterday's sharp losses. But risks remain as the coronavirus death toll tops 420 and more than 20,000 cases are confirmed.
BP investors cheer a fourth quarter beat despite a key profit reading falling 26% on weak crude prices. The oil major's CFO tells CNBC it is too early to assess the impact of the virus outbreak.
Coronavirus and what's happened in the last few weeks, which is really what's driving the prompt price down to where we are now, sort of 55 Brent. That could take 300,000 to 500,000 barrels a day demand out. That would still leave demand healthy at 700 to 800,000 barrels a day.
Investors find the faults with Alphabet, selling the stock on a mixed set of numbers and disappointing YouTube data, while Tesla enjoys a 20% spike, with shares making their biggest one-day gain in 6 years.
And Democratic candidates voice their outrage as the results of the Iowa caucuses are delayed. But Pete Buttigieg makes a late-night speech saying he is confident he is leading the pack.
Tonight, an improbable hope became an undeniable reality.
Well, good morning, everybody, and welcome to Street Signs. I just want to take you to the market price action we've had over the last 24 hours because it is a sharp contrast with the price action we had just 24 hours ago at the beginning of Street Signs. I remember yesterday we had very steep declines in the Chinese index after it reopened after the Lunar New Year holiday. But overnight, the theme is of stabilization. We've got Shanghai Composite trading up on the session 1.3%. So some stabilization coming in there. Of course, still hasn't fully recuperated the losses from Monday when these indices were down about 8%, but still moving in the right direction. And of course, aided by liquidity supports coming in from the central banks. So the liquidity injection helped relieve some of the fears. Hang Seng, you can see, also up about 1.2% as well, though worth mentioning that the first death on back of coronavirus has been reported in Hong Kong overnight. So clearly the market is keeping a close eye on coronavirus still and its effect not just on global markets but on global economics as well. Europe, again, you can see that the mood is more positive, and this is in line with some of the price action we had yesterday. It actually was a strong day for the Stock 600. We're seeing that again today. Strong gains you can see in the FTSE up about 1.5%, so we're seeing some good moves in the miners there. Xetra DAX also up about 1% as well, so we're getting some good moves in the chemicals and some of the industrial names there. And you can see that CAC 40 is also up a similar amount. So good momentum into the start of the European session today. And some of the sectors that are exposed to China are rebounding nicely, basic resources being right at the top there. And this is the picture for U.S. futures. We had a good close for Wall Street yet again, with the tech sector NASDAQ leading the charge. Very strong performance in Tesla yesterday. That stock up 20%, and marginally weaker performance out of Alphabet in after hours, down 4%. So that's something the market will be watching out for. But yesterday we did have those very strong ISM manufacturing numbers, which helped propel these markets higher. And you can see that going into the session later today, obviously all of the markets are pointed higher as well. One thing just on the political side of things, we are watching and closely waiting for the results of the Iowa caucuses that has been delayed till the end of the session. So a bit of a delay from the political development side of things in the U.S. Well, meanwhile, Hong Kong has confirmed its first fatality from the coronavirus outbreak, the second death outside mainland China. The overall toll has risen to 427, with over 20,000 confirmed cases of infection. And hospital staff in Hong Kong say the victim had a pre-existing chronic illness and had visited Wuhan last month. Medical workers in the Chinese territory have held a second day of strikes. The Chinese President Xi Jinping has described the infectious virus as a test of the country's governance, but reassured his citizens that his government has launched a, quote, people's war of prevention against the epidemic. Meanwhile, the World Health Organization's Director General has repeated the WHO's recommendation that travel bans are unnecessary, saying the chance of the virus going outside China is very low.
Moody's says the coronavirus outbreak will hurt China's economy by curbing consumption. The rating agency is warning there could be a significant fall in revenue and profit at Chinese corporates for several months. Despite the concerns, Moody's says Beijing has the financial means to absorb the impact of the virus. Let's get out to our colleague Matt Taylor, who joins us now from Singapore. Matt, Jemana broke down for us the headline moves in Asia overnight, a rebound coming together. Break down the detail for us. What's been happening?
Yeah, a much better day, Juliana, as we saw, of course, a stabilisation in China markets after yesterday's 8% sell-off. We did see a lot of strong performances across the Asia-Pacific region, with the exception of New Zealand, which was down. But I want to point out the Kospi up by 1.8%. In fact, it was its best day in over a year on that market. Singapore stronger as well. We also saw gains coming through for the likes of Australia, up by about 0.4%. We had an RBA meeting there, the central bank leaving rates on hold at a record low. But it was all about the China and Hong Kong markets again today. You can see a nice rebound. Of course, still some ways to go to recouping all of yesterday's losses, but up by better than 1% on the Shanghai Composite. On the Shenzhen market, up by about 1.8%. This despite, of course, the number of coronavirus cases increasing to beyond 20,000 and the death toll rising to 427, including one individual in Hong Kong. We saw the Hong Kong market, though, up by 1.2%. That's the first reported case of a death in that city and outside of mainland China itself. So the Hang Seng moving higher. After the market closed, we did get some retail sales numbers, down 11.1% for 2019 in value terms, and more when it came to volume as well. One sector, though, that I want to tell you about where we are seeing a fair bit of downside, though, is the Macau gaming stocks. This is the city looks at potentially shuttering casinos there for 2 weeks. This is to halt the spread of the coronavirus, with the Macau CEO saying the shutdown might be necessary, and they'll be meeting with casino operators later on today to essentially discuss that in a little bit more detail. But steep falls in the order of about 2% across this space today, so one of the big sectors that we were watching. But that's the latest in Asia. A better picture than this time yesterday. Ladies, back to you.
Matt, thank you so much for breaking it down for us. All right, well, central bankers are no doubt watching coronavirus. The president of the Atlanta Federal Reserve, Raphael Bostic, says the spread of coronavirus has not changed his outlook for the year. Bostic's comments come as traders begin pricing in another Fed rate cut by the summer, amid market jitters prompted by the outbreak of the infectious illness. However, the Fed president added that last year's 3 cuts provided, quote, a lot of stimulus for where the economy was, making it more resilient. Steve Leisman has taken a look at the potential economic impact of the virus outbreak on the U.S. economy.
While the coronavirus dominates the headlines, it's in fact just one of the major challenges the U.S. economy faces that could depress growth in the first half of the year, and which markets believe could bring the Fed back into play. The coronavirus has prompted big downgrades to China's economy and somewhat less to the U.S. Boeing could take a half point off GDP this quarter and maybe next. Tariffs, the U.S. and the world both face substantial existing tariffs, even though some came off, and there's still manufacturing and global economic weakness even before corona, though some signs of stabilization, for example, in the ISM manufacturing report. Now, just focusing on corona, several forecasts have said it could reduce China's GDP by up to a half a point, and that would shave several tenths off U.S. GDP in the first half. The People's Bank of China responded to the potential slowdown with a large liquidity injection, and some U.S. forecasters believe the Fed could cut as well. UBS writes, quote, we continue to see substantive weakening in the economy and believe that the softness will ultimately drive the FOMC to materially reassess the outlook and to cut rates 3 times. UBS sees growth of just 0.6% in the U.S. this quarter and next. Morgan Stanley, on the other hand, is more upbeat. They wrote, while the coronavirus development does imply some downside to near-term growth, it should not derail the recovery. The downdraft in global yields and stocks on Friday suggests that the bearish view is prevailing, at least for now. The Fed funds futures market's trading with a 70% chance of a rate cut in September, and there's now a greater than 50% probability of a second cut by December. Steve Leisman, CNBC Business News.
Well, let's switch to some other corporate news in Europe this morning. BP has beaten fourth quarter forecasts despite the British energy giant posting a 26% drop in quarterly underlying replacement cost profits on the back of weaker oil and gas prices. BP also announced it has completed $1.5 billion share buyback program, adding it will raise its dividends. BP's latest earnings come on the final day of Bob Dudley's reign as CEO. Now, speaking to CNBC, the CFO, Brian Gilvary, said the spread of coronavirus could cut oil demand by 300,000 to 500,000 barrels a day.
What we're looking at now is, if you look at oil demand over the last decade, it's about 1.3 million barrels a day, is a rough sort of note that we've seen in terms of growth of oil demand. So we're up over 100 million barrels a day of demand today. Last year was below 900,000 barrels a day. So actually 19 we saw quite a bit of demand destruction coming in off the higher prices. Coming into this year is looking around about 1.2 million barrels a day. We think coronavirus and what's happened in the last few weeks, which is really what's driving the prompt price down to where we are now, sort of 55 Brent, that could take 300,000 to 500,000 barrels a day demand out. That would still leave demand healthy at 700 to 800,000 barrels a day. And then I think in terms of price direction, all roads will then lead to what OPEC will do in terms of trying to rebalance the system to get back to something around $60, $65 a barrel.
You've been around for a long time and looking at the oil demand story, and there's been... So I think you were here for SARS.
Was it a great way of putting it, Karen? Was it a great
Well, you're about to step away from the role because you've been there for a while. And clearly you're around for SARS and you've seen what the oil market did back then. The measures this time are quite different, where you've seen airlines effectively not flying in and out of China. You've seen shutdowns in major cities. How different are these measures to the oil demand story than what we saw back in 2003?
Well, actually, living through SARS as we did back in 2003, we saw a very similar prompt reaction at the front end of the market, which is what you're seeing today with coronavirus. I just think it's too soon to say what the actual output will be, but I think if prices are going to be higher, it's going to come off the back of OPEC. And if OPEC roll their cuts through to the end of the year, that would make up the imbalance of about 500,000 barrels a day that we can see today.
All right, well, we're going to squeeze in a quick break, but coming up on Street Signs, spelling it out. Alphabet unveils sales figures for its YouTube and cloud units for the first time ever. We'll break down the numbers next.
Think you need to buy expensive skincare products to see dramatic results? Try Olay Skincare. Just 1 jar of microsculpting cream has the hydrating power of 5 jars of a prestige cream, which helps plump skin cells and visibly smooth wrinkles, while new Olay Retinol 24 provides visibly smoother, brighter skin. For dramatic skincare results, try Olay and now receive 25% off your purchase at Olay.com. Brand power helping you buy better.
The world's newest ocean cruise line is yet again a world's best. Viking's elegant ships deliver a superb, inclusive experience with enriching shore excursions, alternative dining, all-veranda staterooms, Wi-Fi, and much more. We're very proud to have been named a world's best 4 years in a row by Travel and Leisure readers. Learn more at vikingcruises.com.
Robinhood believes now is the time to do money, without the commission fees and account minimums, so you can start investing wherever you are, even on the bus. Download now and get your first stock on us. Robinhood.
I created Hint Water to make water taste better. We started in one grocery store. Now we're online and everywhere. And we couldn't have done it without NetSuite.
NetSuite is the world's #1 cloud business system. Schedule your free product tour right now at netsuite.com/grow.
Hi, I'm Joan London. Today's senior living communities have never been better. And nobody understands your options like the advisors at A Place for Mom. A Place for Mom is a free service to help you find a place that fits your parents' budget, needs, and personalities. Call today. A Place for Mom. You know your family. We know senior living. Together, we'll make the right choice.
Call A Place for Mom to get your free ebook on financing senior care. Call 1-800-211-0451.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
A Squawk Box exclusive. Legendary investor Ron Barron shares his bullish vision for Tesla and confidence in Elon Musk's magic touch. Today, 6 a.m. Eastern. Watch or listen live on the CNBC app.
Welcome back to Street Science. Alphabet shares have dropped an extended hours trade after the tech company posted its slowest fourth quarter revenue growth in 5 years, missing estimates. Arjun joins us with more. And Arjun, break it down for us. So why such a big reaction in after hours for the stock?
Well, Jemima, let's just kick off with the top line numbers here on the EPS front. Alphabet actually beat with $15.35 per share versus 12.53 estimates. But on the revenue number, that's where they miss expectations. And I want to dig into that as well, because there were quite a few concerns with this report, and in particular relating to this big section here of Alphabet's earnings. And that really is around its advertising across numerous of its properties. That's where we saw a slowdown in growth. Actually, the ad growth of Facebook and Amazon even outpaced the growth that Alphabet posted when it came to advertising as well. There was a lot of excitement about this orange bit here, YouTube ads. It was the first time the company broke out those numbers, and it showed that it made up just about 12% of that overall ad total. This was less than what the market was expecting, given the fact that Alphabet and Google have talked so much about the excitement about YouTube. Some of those expectations, given the fact that Alphabet haven't broken out those numbers, were quite high going into this report as well. This other section here is also quite interesting, because this is what really dragged on revenues. This includes the hardware division, and we saw a significant slowdown in growth there as well. Perhaps if we're looking for some silver linings, one of the big positives was Google Cloud. Revenues in that division were up 53%. Very strong growth, but look, to put that in perspective, Amazon's cloud business is about 4 times the size of Google. So Google has a lot of catching up to do, but it's promising that its growth is growing very quickly. I think looking forward through into the rest of the year, if we look at this Alphabet business, a few headwinds to flag. One, of course, is regulation. Alphabet currently facing an antitrust probe over in the US around advertising, around search bias, and around its Android mobile operating system platform as well. So that's going to be a big headwind and concern, black cloud hanging over this company in 2020. And ultimately, the big question for investors is, can this company return to the big growth numbers that we've seen in the past? Guys, back to you.
Arjun, thank you so much for breaking down those Alphabet numbers. And you will be returning to the show later on to talk Tesla, so look forward to that. Meanwhile, let me just give you a little teaser of what's to come on that car maker. Tesla shares skyrocketed almost 20% on Monday. This after Panasonic's U.S. battery business, a key supplier at Tesla's Nevada Gigafactory, posted its first quarterly profit. Panasonic shares also jumped on the strong earnings. Yesterday's move marked the biggest single-day move for the electric car maker's stock since 2013. The rally started, though, with a bullish call from Argus Research, which hiked its price target on the stock to $808. Tesla shares are now up some 300% since last summer, thanks to better-than-expected earnings and a ramp-up in production at its Shanghai factory. All right, shifting gears to the financial sector, Italy's banks are preparing to sell off their high-risk debt over the coming weeks, capitalizing on growing investor demand for high-risk bonds. That's according to Reuters. The likes of Banco BPM, UBI, and Intesa Sanpaolo are expected to issue their convertible additional Tier 1 bonds, or COCO bonds. Investors expect the Italian lenders' cleanup efforts will be reflected in their full-year earnings, which kick off today with Intesa Sanpaolo. With that, let's bring in our guest, Francesco Castelli, head of fixed income at Benor Capital. Thanks for joining us this morning. Well, let's just pick up on the back of that story around the COCO issuance coming or expected to come from the Italian banks. So far this year, we've seen pretty decent appetite from Italian investors for this high-risk debt. Do you think that's justified?
Well, it comes at the end of a long process of restructuring for Italian banks. If you look at the NPL exposure of Italian banks has halved in 3 years, so they are in a much better shape. And the sector is in a much better shape. We've been advocating a long position, a long exposure to European banks over the last 3 months. This morning we saw an upgrade by a big American bank. So we see a lot of people is joining the trend. Economy is improving, regulatory tightening is over. Rates are negative, okay, but they are not going to get any more negative than that. So we see a lot of factors moving in the right direction. Certainly, Italy is one of the weakest nations in Europe, so it's sometimes the weakest link in European banking. But yes, we do see a lot of improvement, and there's a reason for this increased appetite from investors.
I certainly take your point on NPLs, which I know have been a key focus for investors and one of the key, headwinds for the Italian banking sector. But still, growth is very lackluster in the Italian economy. So, is there really reason to be bullish here on Italian banks?
To be honest, growth has been zero for the last 6 years or so. And Italian banks have learned how to survive. If you look, for instance, at banks like Intesa, they've been making money sequentially and very steadily for the last, for the last 10 years. And so there's a way out. Obviously, it has been very expensive for the government, who supported restructuring in the banking sector, who will continue to support restructuring in the banking sector. And also a lot of money paid by shareholders. Let's not forget it. It wasn't a very good decade for bank investors in general and for Italian bank investors in particular.
By the way, I remember when you made that call, you were on Street Signs and you came on and you were very bullish Italian banking system. And you got a lot of pushback at the time. So congratulations on your call. Italian banks up 30% since then. I want to ask you going forwards, and obviously you've answered the Giuliana's question about how much further we can go from here. But just on the consolidation side of things, are you expecting to see more activity in that space this year out of the Italian banks? And certainly there are some smaller banks that would be ripe for acquisition at this point.
Yeah, exactly. That's exactly the point. We will see consolidation because apart from the large two banks and apart from Mediobanca, which is kind of a strange animal, the rest of the banks are just worth 3 billion or less. So we're talking really about small caps. And yes, we will see consolidation. After the cleanup of MPS is over, and probably we will hear news in the next few days that we might see more movement there. But again, there's a big regulatory pushback. M&A in European banks is difficult, is expensive. Yeah. You are supposed to pay not only the price of the bank you are purchasing, but also for the price of the additional assets you put on your balance sheet. And that's really, really a big hurdle for a lot of banks.
It's a capital intensive. All right, Francesco, we'll leave it there. Thank you very much. And obviously we do have Intesa Sanpaolo earnings to watch out for later, anyone who's following the sector. So stay tuned for that. Francesco Castelli, head of fixed income from Banuar Capital. Now, the Bank of Japan Governor Haruhiko Kuroda has warned that the impacts from the coronavirus on the Japanese economy may be big due to China's large economic presence in Japan. So yet another economy warning about the impact of coronavirus. Let's bring in Diana Shoileva, the chief economist from Nido Economics. We also had comments from Moody's earlier, which I thought were very interesting. They were warning that the outbreak will hurt consumption and also have credit implications for the Chinese economy. And I think the credit implication point is very, very interesting to pick up on here. I mean, many people are focused on the economic hit, but also let's not forget that China is a lot more indebted today than it was back in 2003, and delinquencies have been rising.
Absolutely. I mean, the coronavirus outbreak comes at a very bad time for China. And not only growth has slowed down significantly in the second half of last year, and they were struggling to get it going to even stabilize it, but this year was going to be the crunch time for trying to sort out China's very large bad debt problem. On our estimates, credit losses are likely to amount to about 20% of GDP. So what we are seeing is actually much more severe shutdown, unprecedented really shutdown, certainly of Hubei province and Wuhan in China in response to this virus. The impact on the economy is going to be much bigger than SARS.
And have you put out a number? Do you have an estimate? Because many other analysts out there are saying that we could actually end up with annualized growth of 4% for the first quarter, for example.
Well, To answer this question, I have to tell you that we've been calculating our growth numbers for China since 2005. So we have our own way of seeing what growth is. And on our numbers, growth average quarterly annualized just over 3% in the second half of last year. Okay. So when we then estimate what the impact's going to be like, even on the assumption that it will be a repeat of SARS, which I think it will be worse, we could easily get into a technical recession in China in the first half of this year.
According to your numbers, not the official published numbers.
Yes, but what we found out when we created these numbers, and I've observed them for 13 years, they actually tend to be a lot more in line with policy action than the flatlining, official number that no one believes.
Let's leave the economic impact aside for just a moment, because the Chinese Foreign Ministry had some interesting comments yesterday. They really came out swinging against the United States for taking such a drastic action in response to the outbreak, effectively closing their borders to people coming in from China. And there's also been reports about China potentially asking for some leniency when it comes to their pledges in the Phase 1 trade deal. So how are you thinking about the political fallout from the coronavirus?
Well, look, actually, I'd say more important question is to look at what's going on inside China in terms of the political repercussions. Now, there certainly is a virus, and it certainly has raised some concern, though what I observe is that the reaction in China originally to the threat of the virus, given, of course, it's much more infectious than SARS, but the death rate is a lot lower, and actually now we're getting into a stage where the recovery rate it seems to have taken over the death rate. So what's interesting is that this viral outbreak would certainly be a very opportune time for a number of political realignments within China. And it's very difficult to discern what actually is going on. It's certainly not helping China-US relations for a variety of reasons. I mean, we have a strategic, all-encompassing geopolitical clash between an aspiring power and an existing power.
All right, Diana, we're going to leave it there. Thank you very much for joining us today. Diana Chaleva, the chief economist from Inoto Economics. Also coming up on Street Science, confusion reigns as the Democrats' first round of caucus results are delayed due to inconsistencies. We'll be live from Iowa in just a few moments.
Power outages can be unpredictable, inconvenient, and disruptive to your life, posing a real threat to your comfort and safety. When the power goes out, you have no lights, no refrigeration, no heating or air conditioning. Your well or sump pump won't work. Your modern daily electronics are rendered useless. And what if the power's out for days or weeks? Are you prepared? You can be with a Generac home standby generator.
24 days we were without power. I had water, I had ice, I had coffee, I had air conditioner. I was able to stay here because of Generac.
When an outage occurs, your Generac home standby generator automatically powers up, so your life goes on without disruption. You and your family are comfortable, safe, and secure. Generac generators run on your home's existing natural gas or propane. And Generac's standard mobile link remote monitoring system keeps you posted on operating status, maintenance updates, and more. Generac generators are designed, engineered, and purpose-built in the USA. Generac is the #1 manufacturer of home standby generators in the world. 8 out of 10 home generators are Generac, with thousands of satisfied customers.
Very good product, very, very good reviews from everybody.
Prices start at just $19.99, and special financing is available with surprisingly affordable monthly payments. Call now to schedule your free in-home assessment with one of Generac's 6,000 nationwide dealers. The call is free, the assessment is free, and there's no obligation to buy. Plus, if you act now, you'll receive a 10-year extended warranty absolutely free. That's a $995 value. Call now, so the next time there's a power outage, your home powers up. Power your life with Generac. Call or go online to schedule your free in-home assessment today.
Racing has taken me all over the world, but when I put on the helmet, I am still in India. India, where I found yoga.
Slow down. Breathe.
I have breathed in India's magic. I have felt its warmth. Yoga has taught me the truth about life and motorcycles. That the more still you are, the further you can go.
Incredible India.
Tesla on a tear. The stock riding high, up 84% year to date. A look at what's driving the momentum. Squawk on the Street today, 9 a.m. Eastern. Watch or listen live on the CNBC app.
Welcome back to Street Signs. I'm Juliana Tattlebaum.
And I'm Shimona Versace, and these are your headlines.
European equities join the relief rally as Chinese stocks rebound from yesterday's sharp losses. But risks remain as the coronavirus death toll tops 420 and more than 20,000 cases are confirmed.
BP investors cheer a fourth quarter beat despite a key profit reading falling 26% on weak crude prices. The oil major CFO tells CNBC it is too early to assess the impact of the virus outbreak.
Coronavirus and what's happened in the last few weeks, which is really what's driving the prompt price down to where we are now, sort of 55 Brent. That could take 300,000 to 500,000 barrels a day demand out. That would still leave demand healthy at 700 to 800,000 barrels a day.
Investors find the faults with Alphabet, selling the stock on a mixed set of numbers and disappointing YouTube data, while Tesla enjoys a 20% spike, with shares making their biggest one-day gain in 6 years.
And Democratic candidates voiced their outrage as the results of the Iowa caucuses are delayed, but Pete Buttigieg makes a late-night speech saying he is confident he is leading the pack.
Tonight, an improbable hope became an undeniable reality.
Well, the Democratic Party of Iowa says the results of its caucus will be released later today. This after a new reporting system led to serious delays in counting the results. Chair of the group, Troy Price, said the issue was not due to a hack, adding the party is manually verifying the data to ensure accuracy. Now, Wendy Woolfolk from NBC News joins us right from the heart of it all in Iowa. Iowa prides itself, Wendy, on kicking off election season. How much of a disaster is this?
Hi, Juliana. Quite a mess, I would say. And after all of the hype and lead up to the beginning of the 2020 election, this is certainly not the end any Democrat here in Iowa would have predicted. It was a very strange evening as we waited for those results. And as the hours passed last night, the candidates and the media, we waited for those highly anticipated numbers. After several hours passed with no results, Senator Amy Klobuchar was the first candidate to come out and declare her own victory here in Iowa. And she announced full steam ahead with her campaign to New Hampshire. All of the other candidates quickly followed suit, each giving some sort of pre-victory victory stump speech last night. Meanwhile, you've got this state Democratic Party here in Iowa scrambling. They finally came out and said that they had found inconsistencies in their reporting, and they were blaming the delay on this new app that precincts were using to relay the results. So at this point, they're having to verify all of the votes across this state the good old-fashioned way, just the old-fashioned paper trail. Now, legal counsel for the Biden campaign, Juliana, they sent a very strong letter last night saying, quote, "We expect a full explanation of the quality control methods before officials release those election results here in Iowa." They are expecting that will happen at some point today, although no word on when that will happen. In the meantime, all the candidates here have gone on back to New Hampshire for the primary that's starting there a week from today. That's the latest here in Iowa. Back to you.
Wendy, thank you so much for joining us with the latest. Wendy Woolfolk from NBC News.
Well, the Iowa caucus rounds out the political trifecta currently unfolding in the U.S. President Trump is set to deliver his State of the Union later today as senators prepare to make their final case for whether he should be convicted or acquitted in his impeachment trial. NBC's Alice Barr has more on the final stages of the impeachment process.
Senate will come for the first time in the impeachment trial of President Trump, senators who sat as silent jurors are giving their take, with all eyes on a few centrists, like Red State Democrat Joe Manchin, who would not say if he'll vote to remove the president, but did introduce a resolution to censure him.
And censure would allow a bipartisan statement condemning his unacceptable behavior in the strongest terms.
Moderate Republican Lisa Murkowski saying she'll vote to keep President Trump in office, but with this sharp rebuke.
The president's behavior was shameful and wrong.
House managers aiming their closing arguments today at those few senators who say the president's actions were inappropriate but not impeachable.
If you find that the House has proved its case and still vote to acquit, your name will be tied to his with a cord of steel and for all of history.
President Trump's lawyers urging senators to let voters decide his future.
Reject these articles of impeachment. It's the right thing for our country. The president has done nothing wrong.
With the Republican majority all but certain to acquit and a vote Wednesday afternoon, the only question now is how many senators could cross party lines. More clues could come tomorrow when senators continue their speeches before casting their final votes into history. The White House had hoped the vote to acquit would come one day earlier, before the president's State of the Union address tomorrow night. In Washington, Alice Barr, NBC News.
All right, let's get out to John Raines, the head of political risk at IHS Markets. And John, before we pick up on the impeachment, I want to take it back to Iowa, assuming at some point today we will get the results of the caucus. I've got to ask you whether or not you think that the leading four contenders, and here I'm talking about Biden, Warren, Buttigieg, and Sanders, could be at risk dependent on the outcome of today. It's just going to be business as usual once the caucus is out of the way.
I think it's going to be an interesting. Thanks for having me on. I think it's going to be interesting to see how this thing comes out. I mean, certainly the ones that were like Mayor Pete, he was really hoping for a big bump here. He did really, really well. That gets muted a little bit because he's not going to have the big speech that comes out of this, so that propels him into New Hampshire. That being said, I think he's going to be okay. I think Sanders, of course, is going to look good at this, but I think really the one we're looking at this point is Biden. It looks like, I mean, we don't have any confirmed results now, but there's a possibility he finished fourth. And there's a possibility he's going to finish fourth in New Hampshire. And if that's the case, it's going to be a bad few weeks for him leading up into these next primaries where he's going to be a little bit safer, say Nevada and South Carolina. But, yeah, not so great for him.
Something to watch. But, I was very interested to read yesterday that the winner of the Iowa caucus only ends up with 41 votes, 41 delegates out of the north of 1,900 that's needed overall. So as a percentage of total number of delegates, it is actually quite small. Why is Iowa so significant for the race at this point? Is it just all about momentum from here?
Exactly. It's all about momentum. The number of delegates here is minuscule. They're absolutely not important at all. It's just about the idea of getting your face in front of these voters that, I mean, a lot of Americans really aren't paying that much attention, and all of a sudden they have these faces put in front of them, and all of a sudden they start to get galvanizing and gain momentum. And so that's what I'm saying before with Mayor Pete here. Probably a lot of Americans don't know who he is. All of a sudden he either wins or finishes second. That really propels him into New Hampshire.
John, in terms of the impact of what's going on, these inconsistencies taking place in Iowa and what many have described as chaos, how do you think this is going to affect the national view of the Democratic Party? Is this going to weigh on the party as a whole?
Yeah, I think temporarily it doesn't look good. I mean, it's certainly hard to argue, and I think what Republicans will say is if you can't handle a caucus, how are you going to be able to handle the government? So I think they are going to take a short-term hit, but long-term, I think other issues are going to be in play here. And again, most of the time when we look at these re-election campaigns, it's a referendum on the president. It's still probably going to be so.
John, let's switch gears here away from what's going on in Iowa to the impeachment trial. I think the prevailing view is that President Trump will be acquitted. And the Democrats, they won't be surprised by that if that is the outcome here. But they all along thought going through the process was going to be worth it. Do you think that they still have that stance? Was it worth it for the Democrats to go through this impeachment process?
I think that's a great question. I think ultimately, at the end of the day, it looks as though Donald Trump's poll numbers went up about 1 to 2 percentage points throughout this whole impeachment process. Now they've gone down by 1 to 2 percentage points. So I don't think it has much as far as, overall impact as far as the public is concerned. But I think it does make a difference because I think that Democrats felt like they felt compelled to do something to respect the wishes of their base. So from that angle, I think they're appreciative of it. And other angles, I think maybe not so sure.
Well, the flip side of that, John, I want to ask you is what does it tell you about the state of the Republican Party? You only had 2 Republican senators opt to bring in witnesses. Everyone else pretty much touted the party line. Has the Republican Party essentially just become a party of President Trump?
I think you hit it right on the head. I think for the most part, what we found here is that senators or politicians in the Republican Party that oppose President Trump have often found themselves in his crosshairs. And so therefore what they discovered is it's usually better in these circumstances to be with the president. And I think that's what you've seen transpire here. It will be interesting to see what happens with the issue of censure. I think that's a possibility where you might get a little bit more bipartisanship. But for the most part, as we see, throughout most of the last few months, this is really the party of Trump.
All right, we'll leave it there. John Raines, thank you very much for joining us. John Raines, the head of political risk at IHS Markets. And Juliana will spell out in a little bit more detail how markets are faring this morning as well.
Thank you very much, Shimana. Well, in light of the trifecta of events in focus in the U.S., as we just mentioned, the Iowa caucus, the impeachment trial, and the State of the Union address due out from President Trump, let's take a look at U.S. futures. Yesterday was a positive day for Wall Street, with the Dow ending about 0.5 percentage point higher, the NASDAQ rallying 1.3%. Led by the FANG stocks, and the S&P also ending higher. And as you can see there, we're in for extended gains today. The Dow looking at a triple-digit rise at the open, I think that is more than 300 points. So we're looking at gains on Wall Street. And that follows on from a strong morning coming together here in Europe. Let's take a look at the major indices here. The DAX is up more than 1%. The French index, the CAC there, up more than 1% as well. Italian stocks, Spanish stocks, UK stocks. We are looking at green across the board here. And this, of course, comes after a rebound in China. Yesterday was a very difficult day for mainland Chinese stocks as those investors woke up from the New Year holiday and woke up in terms of trading. But today, it's a very, very different picture. Investors are pausing for breath in terms of the sell-off that we've seen, and here in Europe, adding to yesterday's more modest gains in the European session. Let's take a look at Forex markets. What moves are like in terms of currencies. The pound stabilizing versus the dollar around the 130 mark. Taking a look at the euro, we are looking at a slight bit of weakness, but no change really around 110. Yesterday, worth noting that the dollar index, the dollar versus a basket of different currencies, advanced. So that's the picture for markets at this point, about nearly 2 hours into the session.
All right, thanks, Juliana. Also coming up in Street Signs, Disney is set to release its first earnings report since the launch of its long-awaited streaming service. We will preview the results in just a few moments.
Exploring the heart of historic Europe with Viking, you'll get closer to iconic landmarks, to local life and legendary treasures as you sail on board our patented, award-winning Viking longships. You'll enjoy many extras, including Wi-Fi, cultural enrichment from ship to shore, and engaging excursions. Viking, voted #1 river cruise line by Condé Nast readers. Learn more at vikingcruises.com.
Purple's new purple mattresses, and it is amazing. You have to try it.
Oh, this doesn't feel like memory foam.
No.
This feels amazing.
Right?
What is it?
Actually, it's called Purple, and it's a completely unique comfort technology, meticulously designed to cradle and support the human body.
Cool.
Take advantage of Purple's Snore in 20 sale and get free Purple sheets and a premium sleep mask when you buy any Purple mattress.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
A Squawk Box exclusive. Legendary investor Ron Barron shares his bullish vision for Tesla and confidence in Elon Musk's magic touch. Today, 6 a.m. Eastern. Watch or listen live on the CNBC app.
Welcome back. Well, Alphabet shares dipped in extended hours trading after the tech giant posted slower than expected fourth quarter revenue growth, but beat on the bottom line. Josh Lipton has more.
Alphabet delivering a mixed report for investors. Let me give you those numbers. Reporting Q4 EPS of $15.35 versus expectations of $12.53. So a beat on the bottom line. The top line, though, came in light, $46.08 billion. Analysts had forecast closer to $46.9 billion. CFO Ruth Porat did host a quick call with reporters, was asked about that top line miss. Were there reasons for that, challenges in the quarter that maybe investors and analysts didn't see coming? She simply said, listen, they are happy with the growth they're seeing. She called that specifically, they are very pleased with their cloud momentum, the momentum they see in that cloud computing business. She did know that hardware sold well over the holidays, but it was compared to a stronger report than last year, perhaps suggesting some tough comps there. Some news in this report, too. They did make some new disclosures in this report about a range of industries. So they broke out their search business, 17% acceleration there, very strong, she said, rate of growth. She also broke out YouTube ad revenues. That does not include, Porat says, YouTube subscriptions, but that's a $15 billion business in 2019. And they broke out their cloud business in 2019. Ruth Porat telling reporters that 2019 ended with a $10 billion annualized run rate there. And she even broke out cloud revenue for the quarter. That was also new, about $2.6 billion. Of course, their rivals in the cloud, Amazon and Microsoft, just reporting very strong results, too. Microsoft does not break out, for example, Azure revenue by dollar figure, but analysts think they did about $4.8 billion in their last quarter. And finally, we did talk about total cost and expenses at the company. Where are they spending money? Ruth Porat says they continue to invest in long-term opportunities. We know one of those is cloud computing, hiring salespeople, buying equipment, and building out data centers. Josh Lipton, CNBC Business News, San Francisco.
All right, well, sticking with tech, Tesla shares skyrocketed almost 20% on Monday. This after Panasonic's U.S. battery business, a key Tesla supplier, posted its first quarterly profit. Yesterday's move marked the biggest single-day gain for the electric car maker stock since 2013. Tesla shares are now up some 300% since last summer, thanks to better-than-expected earnings and a ramp-up in production at its Shanghai factory. Our colleagues on Squawk Box asked the head of thematic research at Global Data, Cyrus Muawala, about the reasons behind Tesla's surge.
And we've just published a report on sustainability that essentially says the evidence shows the exact opposite. CEOs who embrace sustainability now will optimize profits, and those who don't will lose customers and profits over the next decade. It's not going to happen overnight, but they need to start now to secure the next decade.
All right, well, we promised you that Arjun would be back with us after your Alphabet run-through. Let's talk Tesla now. What's really changed about the Tesla story to justify this meteoric rise?
Well, there's a few things that have been going on over the past couple of weeks. First was that Q4
earnings report where they showed back-to-back quarters of profitability. This is something that shareholders have been yearning for a long time, to show that the Tesla model works from a profitability standpoint. The other one is the outlook Tesla gave as well, so that they'd be comfortably able to deliver 500,000 cars this year as well. There's strong demand on the Model X, the Model S, but also the mass market Model 3 as well. And the other big factor here is the China factor, because at the start of this year, Tesla began delivering Model 3s in China. That was seen as a big boost for the company. I have seen analyst calls that they can sell 150 cars in China this year. So there's many feel that they're just scratching the surface when it comes to the Chinese market right now. I think that's really some of the big material changes with the Tesla story.
And it's funny, at Davos, I spoke to the CEO of Volkswagen, and he was saying his big thing is that they want to turn it into Volkswagen, a traditional car company, into a tech company. And you certainly look at these valuations today, and you see Tesla has a valuation higher actually than any one of those traditional car makers, any one of the German makers that have been in this business industry for years and years and years. And you can understand why the pressure is certainly on them. But at the end of the day, they produce a lot less cars than the traditional car makers do. So can those valuations be justified purely from a good standpoint?
I think on the valuation front is very interesting. I compared the Tesla story, the big jumps I saw earlier, to sort of what happened to Bitcoin a couple of years ago, and not so much in the product, but more about the thinking about the story. People who believe in Bitcoin, people believe in that story, believe it's the future of money, and many people think that Tesla really is the future of autos here. It's not just about the cars, but it's about the technology it brings with it, whether that's the being at the forefront of driverless car technology, automation, and also the rest that comes with it. So I think this valuations are very predicated on the idea that Tesla, in the long term, as Cyrus Meliwala was saying there in that clip, is a longer term story. So you're seeing that movement now. The risk for Tesla is they've got to justify this. So they need to continue churning out those profits every quarter and being able to show to the market they can deliver sustainable growth. And that, I think, is going to be the challenge here.
And obviously that positive profitability is key. Yeah. All right, Arjun, thank you for breaking it down for us. A busy day, a busy week for the tech sector. Arjun Karpal, our CNBC tech correspondent.
And just a reminder, we have a wealth of stories on Tesla and Elon Musk on our website. Read excerpts of the recent research notes and find out why analysts have piled in to raise their price targets. Find out how much short sellers have lost on the carmaker stock this year amid its latest spike, and how to get hired at the company and what factor won't hold you back. It's quite interesting. You would you want to check that one out. According to Musk himself, much more coming up on that throughout the day.
Gotta check that one out. All right, elsewhere, Disney will be reporting its quarterly earnings later today. FactSet's forecast revenue will come in at around $20 billion, compared with $15 billion a year ago. These earnings cover the quarter in which the media giant threw its hat into the streaming wars, signing up 10 million subscribers on the first day its Disney Plus platform launched. Let's bring in Tim Mulligan, the co-founder, research director at Media Research. Today is all about Disney Plus, isn't it? Investors want to get more color on how many subscribers they've managed to attract overall. The only number that we can go on is that 10 million that they managed to accumulate at the launch. What are your numbers telling you, and how much market share do you think they've actively gained since the November launch?
Sure. So our data from our consumer survey showed that there in Q4 2019 in the US, there was a 12% weekly active use for Disney Plus. So bear in mind that's self-reported behavior, so that's directional. It's not. It gives guidance as to where they are in the market. That compares with Netflix, for example, at 53%. But it's also twice as high as HBO Now, for example, which is 6% in the same survey. So considering it's a new service that's come to market, considering that this is a traditional media business that's transitioning into becoming a streaming service, it's a really strong start. So I would estimate that they will meet the expectations of Wall Street analysts, and announce that they will have 20 million subscribers. I would be greatly surprised if that wasn't the case.
Right, so 20 million is the magic number we're watching out
Yes.
for. In terms of their other business, I mean, obviously this has been their big push into direct-to-consumer, into streaming, and it was widely anticipated. Is there a risk of cannibalization of their existing traditional TV model, the ESPN, the ABC, the actual Disney Channel, and that people have just been incentivized to switch off from those channels and sign up to their Disney subscription service, which actually will harm them somewhat?
So, yes and no. So there's two sides to that. So the first side is absolutely right. The value proposition is compelling for a streaming alternative. The price point, $4.99. The ability to have access to the robust library of Disney content alongside the exclusive new Zeitgeisty originals, such as The Mandalorian, are greatly appealing. So that will have a negative impact on the more traditional sides of the business, particularly the media network side, which is where the traditional TV revenues come in. But the reality is the world's moving towards streaming. So you can either just ignore that and go into secular decline, or you can recognize the need to adapt to where the market's going. And that is what Disney are doing to their credit.
Let's put the structural conversation aside and just look at one of the big headwinds of the day, coronavirus. How big of a risk is this for Disney? We've seen Shanghai Disney close down, movie theaters are shut across China. So how much of a headwind do you expect this to be for the company?
Disney is clearly not immune to what's happening with other businesses that have a strong China focus. But the adverse impact on Disney for the Greater China region has predated the current challenges around the coronavirus. If you look in their previous third quarter announcements for Disney, Q3 announcements, they announced about a negative impact of what's happening in Hong Kong and the Hong Kong theme park business, which had a significant impact on the theme park segment, which is actually a bigger driver of revenue than TV or direct-to-consumer. So it inevitably has an impact. But I think the reality is this is a transitional thing. It shouldn't have a significant long-term impact.
All right. Excellent. Well, thank you so much for joining us. Tim Mulligan, co-founder and research director of Media Research. Our U.S. colleagues will be speaking with Disney CEO Bob Iger after the media company reports its latest earnings. That First On interview is coming up at 2200 CET tonight.
All right, and that wraps up our show for today. That was Street Signs. I'm Joanna Versace.
And I'm Juliana Tattlebaum. Worldwide Exchange is coming up next.
There you go. Slow slicing fruits, veggies, and those stinky onions that bring you to tears. But not anymore. Introducing NutriChopper, the compact handheld speed slicer that cuts up to 10 times quicker than a knife. Watch. You can have one slice or 10 perfect slices at once. Amazing! You can just julienne, or you can bundle slice julienne sticks at lightning speed. With NutriChopper, you can slice the entire onion, or mince a mound of onions and never have time for tears. Why slice a single apple wedge when you can wedge it all in one snap? NutriChopper comes with the razor-sharp interchangeable stainless steel blades you need to make all of the cuts you want, and all incredibly quick. Chop thick slices, chop thin slices, chop cubes, chop sticks, and wedge whole fruits and vegetables in just 1 second. Slice it and cook it right in the pan, right on your stove. Chop and slice right into the pot for a family-sized stew with no mess. Snap and slice a fruit salad for the kids right into the bowl in seconds. Slice up a healthy salad for a quick and easy meal on the go. Cube meats and cheeses quick, in a snap. And NutriChopper comes with a perfect portion container and fresh-keeping lid, so you can slice it, seal it, and store it all in one. To clean, simply rinse or rack it in the dishwasher. Then lock it to store it safely in a drawer. And now the NutriChopper with the thin slice, thick slice, wedge, and cube blades, and the slice and store container and lid, a value of over $40, is yours for just $19.99. But wait, order now and we'll even pay the shipping for you. You get the complete NutriChopper set with blades and container with lids, all for just $19.99 with free shipping. Here's how to order.
To order, call 1-800-257-9942 or go online at NutriChopper.com. That's 1-800-257-9942 or go to NutriChopper.com. Order now.
We got one of those new purple mattresses, and it is amazing. You have to try it.
Oh, this doesn't feel like memory foam.
No.
This feels amazing.
Right?
What is it?
Actually, it's called Purple, and it's a completely unique comfort technology, meticulously designed to cradle and support the human body.
Cool.
Take advantage of Purple's Snore and 20 sale and get free Purple sheets and a premium sleep mask when you buy any Purple mattress.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
Read. Read yourself past the junk, past the hashtags and the troll armies, the partisan pandering, past all the social media that's making your head feel like, past the gossip mags and millions of stories uploaded each day. Read yourself past the algorithms, because no one ever did anything big by reading small. Read yourself better.
It is 5 a.m. at CNBC Global Headquarters, and here is your 5 at 5. We're going for 2. Wall Street looking to add to yesterday's gains as investors shake off the growing threat of the coronavirus. To infinity and beyond, Tesla shares are surging, something they've not done since 2013. That's that coming up. It's taking an entire sector along for the ride. There are delays in Des Moines, a developing story in America's heartland as the first contest of the 2020 presidential election is thrown into disarray. And coming up short, Google parent company Alphabet underwhelming in its latest earnings report. Those shares are sharply lower this morning. And the Facebook board friending an ally of CEO Mark Zuckerberg. It's raising some red flags. And it's Tuesday, February 4th, 2020. The Worldwide Exchange begins right now. Your stock to watch this morning is Tesla. Take a look at this, because the shares are coming off their biggest one-day jump since May of 2013. It was up huge yesterday and up another 3% in the pre-market right now. Just look at that chart over the past couple of months. A massive surge there in Tesla stock. Much more on that throughout the course of the day here. But first, here's how stock futures are looking on this Tuesday morning. If you take a look at the Dow right now, we'd be up another 330 points. The S&P up by about 35 and the NASDAQ up by 100 at this stage. Some big gains happening in the market. Now, investors are looking to add to yesterday's gains after Friday's broad-based sell-off. The Dow still needs, get this, 459 points to get back to where we were and what we've lost. Remember, Friday down 603 on the Dow, and we were up 144 points in yesterday's trade. Now, the bond market also a key focus right now. Check out what's happening there. Benchmark 10-year note yields just a hair below 1.58%. Two-year benchmark note yields just a hair below 1.4% as well. So that's how the bond picture is shaping up right now. We are also watching oil, trading near its lowest level since January of 2019, briefly dipping below $50 a barrel at one point you can see here. But again, we're back up to $50.82, up about 1.5% still. Over the course of the past 1 week, off by about 5%, so that near-term downtrend very much still intact. Bouncing back, though, around the world as well, not just oil prices, but equity markets. In the Asian trade, a lot of green on the screen. The Shanghai Composite up 1.33%, the Hang Seng in Hong Kong up over 1%, and the Nikkei in Japan up 0.5% as well. So a bit of a bounce back after yesterday's sell-off. Now in Europe, as you can see there, very, very, very green on the screen. Let's spin that globe around over there. The FTSE 100 in the UK up 1.33%. The CAC in France up by about 1.25% as well, and similar percentage gains in the German DAX. I don't see any red on the screen there right now. So yes, very much a positive trade all around the world. Let's now get the latest on what's happening with the coronavirus outbreak. Rahel Solomon joins us now with more details on that. Good morning, Rahel.
Hi, Dom. Good morning. So officials in Hong Kong have confirmed to CNBC that a 39-year-old man has died. This marks the first death there in connection to the virus. It's also just the second outside mainland China. Meanwhile, hospitals in Hong Kong are cutting services as medical workers strike for a second day there. So they're demanding that the border with mainland China be completely shut to stop the spread of the virus. This also comes as officials in China now revealing that there have been another 65 deaths and that more than 3,000 new cases of the virus have been discovered there. So this brings the country's total to now 426 deaths and more than 20,000 confirmed cases. In Macau, officials have announced that casinos there will be closed for 2 weeks, halting the driving force of the city's economy as it confirmed the 10th case of the virus. And Hyundai saying that it plans to gradually suspend operations at its South Korea factories. That begins today until next week. And this is due to the virus disrupting supplies of vehicle components. So you can see that corporate sort of, that corporate effect there with
the
Hyundai.
Response,
right.
For sure. All right, Rahel Solomon, thank you very much for that. All right, well, remember, be sure to tune in tonight because CNBC's special report on the coronavirus outbreak continues. It's 7 p.m. Eastern time. Only here on CNBC. It's the place to go for all the latest on what's happening with that coronavirus outbreak in China. Well, to earnings now. Shares of Google parent company Alphabet lower this morning. The company beating earnings per share estimates for the fourth quarter and matching on overall revenues, but bigger than expected losses in its other bets and slowing growth in its ad business, giving investors some reason to sell this morning. The company also breaking out numbers for its YouTube and cloud businesses for the first time, reporting YouTube ads generated $15.15 billion in sales for its fiscal 2019 and more than $4.7 billion in the fourth quarter alone. Well, back to the broader markets, Wall Street trying to stage a two-day comeback, seemingly shrugging off the growing threat of the coronavirus. This as Atlanta Fed President Raphael Bostic shares his own views on the crisis, saying, quote, "If this becomes a world issue, then that's different. That's a different type of event than I understand it to be today." Adding, "It hasn't changed my outlook or my expectation about our rates path." So with that in mind, joining me now is Matt Maley, Chief Market Strategist at Miller Tabak. It's interesting, Matt, as we talk about Raphael Bostic's comments, the economy seems to be a big focus because of the coronavirus. Are you as concerned right now as perhaps some others about the global economic impact of this outbreak?
Yes, I am, because especially as it looks towards the markets. I mean, we always hear these comparisons to the SARS virus, and what happened then. It really wasn't that big a deal. But we've all heard is that China was only 2 to 3% of the global economy at the time. Now it's 18%, and it's much more consumption driven now, and their consumption is grounded to a halt. And I don't see that these numbers or the virus is getting any better. If anything, it's getting slightly worse. And again, going back to 2003. The stock market was coming off of a 3-year decline of over 50%. Now we're coming off of a 3-year advance of 80%. So instead of the market being incredibly oversold and undervalued, it's overbought and if anything, overvalued. So I think people need to be very, very careful here. If it continues to spread the way it is and cause problems, it is going to have an impact on earnings and growth. And you don't need it to cause a recession for it to have more of an impact than just a 3% decline on the stock market we've seen here in the U.S. so far.
Yeah, it sure doesn't seem like the markets are that concerned right now. Yes, we have some ground to make up to get back to where we were before last Friday, but still, we're looking right now at the bottom of our screens here. The Dow's going to open up about 330 points at this stage. Does this mean now that the pullback is done?
I don't think so. Are we really going to hear an all clear sign? I just don't think so. We have, again, I'm not an expert. I'm not a scientist. I'm not a doctor. But it just seems to me this is something that's going to be with us for a while. And if it turns out to be a long while, we've got some major problems. And the thing is, the market doesn't need really any reason to go down 3 or 4 or 5%. Sometimes it just gets overbought and comes back itself. So now that there is some sort of a reason to pull in your horns a little bit, I think that we will get something like 5% or even more before we see the final bottom, and that's just if things don't get a lot worse.
So does that mean that you are a buyer? You're not a buyer just yet, though, of this market?
Yeah, I'm definitely not a buyer yet. I just think that, sometimes you have to take it, especially after this huge run we've had over the last 12, 14 months. If you miss a little bit of the next bounce and you have to pay a little bit higher, that's kind of like buying insurance. Sometimes you don't have to necessarily spend it to buy puts or buy defensive names. Sometimes you miss a little bit of opportunity cost. But in that case, it's like it's okay to put up with that. Insurance always costs something, and therefore you're not spending. You may have to spend higher later. That's okay, because you may have an opportunity to buy on a dip that I think is coming.
All right, a dip is coming, says Matt Maley. Thank you very much for those market thoughts. We always appreciate it, Matt.
Thank you.
All right, when we come back on the show, a live report from Iowa, where delays have thrown the first battleground for the 2020 presidential race into some disarray. Plus, the one sector getting a boost from Tesla's massive jump Monday. Noted tech investor Gene Munster weighs in on that. And then later on, crude in crisis. The growing impact of the coronavirus and then what it may be having in terms of the effect on the energy patch in 2020. A very busy hour still ahead when Worldwide Exchange returns after this.
I'm 52, but in my mind, I'm still 25. That's why I take Osteo Biflex to keep me moving the way I was made to. It nourishes and strengthens my joints for the long term. Osteo Biflex. Find our coupon in Sunday's paper.
The world's newest ocean cruise line is yet again a world's best. Viking's elegant ships deliver a superb, inclusive experience with enriching shore excursions, alternative dining, all-veranda staterooms, Wi-Fi, and much more. We're very proud to have been named a world's best 4 years in a row by Travel and Leisure readers. Learn more at vikingcruises.com.
Imagine helping their teeth become 4 times stronger, preventing cavities up to 40%. Act Kids Fluoride Rinse. Stop imagining. Start acting. And now, get anti-cavity protection in new, dye-free iced formulas.
Tesla on a tear. The stock riding high, up 84% year to date. A look at what's driving the momentum. Squawk on the Street today, 9 a.m. Eastern. Watch or listen live on the CNBC app.
It's time to change the way you think about money. Personal stories, money tips, strategies for saving and investing. Invest in you. Ready, set, grow. CNBC and Acorns. Go to cnbc.com/invest.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Despite never having used them, Alison Peartree was not initially a fan of purple bricks.
Because I heard from my uncle's cousin's neighbour's dog walker they don't have proper estate agents.
But Alison's uncle's cousin's neighbour's dog walker was wrong. Purple Bricks have experienced local agents ready to sell your home.
Turned out Martin from Purple Bricks was very knowledgeable. And he didn't charge commission. I've even recommended him to my sister's boyfriend's auntie's hairdresser, Sharon.
Purple Bricks. Book your free valuation today.
Fixed fee payable on instruction or after 10 months. Viewing service cost extra.
All right, we are following a developing story out of Iowa where we are still awaiting results from the first of the 2020 presidential nominating contests. Overnight, Democratic Party officials there told the presidential campaigns that results from yesterday's Iowa caucus will not be revealed until later on today. NBC News' Wendy Woolfolk joins us now live from Des Moines, Iowa. And Wendy, what exactly are party officials saying about this, and what exactly is to blame for the delay in declaring a winner here?
Dom, good morning to you. It's quite a mess here after the Iowa caucuses. They are actually blaming technology. They are saying that there was a problem with the new app they were using for party precinct captains to relay those results to the result center back here where I'm standing. Unfortunately, that caused all kinds of speculation, whether the app crashed, whether it was a hack, none of the above. They claim that it was just inconsistencies in the results verification process, and they wanted to go and verify each one of those votes that were cast by these caucus goers hand by hand and do it the old-fashioned way, which is paper trail. It was such a strange night, though, after all of the hype and the lead up to the beginning of this 2020 election. It was so weird to see that no one could have expected an end like this in Iowa last night. We waited and waited, and by the end, all of the candidates themselves were coming out, and each one claiming victory here in Iowa before they head on to New Hampshire.
So Wendy, a lot of them are declaring victory. The one that's getting a lot of buzz right now is Pete Buttigieg. Is there any indication right now that he's justified perhaps in taking a bit of that victory lap that he took last night late?
Absolutely not. No one can say that their numbers or their intel is correct. At this point, there are no official numbers out. Anything that the campaigns are saying or touting right now are internal numbers and internal things they have pulled when they were at all these various caucus locations. There are no official results yet. All of the candidates last night, as you probably saw, claimed victory in some respect. They hope that kind of, quote, momentum will take them into New Hampshire. And we'll see from the Democratic Party here in Iowa today, they're expecting or they're promising that we will have those results sometime later today.
All right, Wendy Woolfolk live in Des Moines, Iowa with the latest on that caucus debacle for right now. We'll see you later on. Still on deck for the show here, we're getting technical, breaking down the charts you can't afford to miss as stocks look to regain that lost ground.
Today's big number, 20%. That's how much WTI crude dropped in the past month, falling below $50 per barrel on Monday to its lowest level in over a year.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen. Healthier brain, better life.
Can you customize the S&P 500 to meet your client's growth objective? Only Sector Spider ETFs can divide the benchmark into 11 investable pieces. This allows you to underweight sectors like real estate and utilities and overweight sectors like technology. Sector Spiders, write your next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully.
This is Vince's desk. Vince is working, just not here. He's on a new project. It's a lot of late nights, early check-ins, even a few tears. Fortunately, his employer gave him plenty of time to get it right. And that support for Vince the dad helped Vince the employee return to work with a whole new purpose. Ultimate Software helps you treat your employees better, because how you treat people changes everything.
Beyond the routine checkups, beyond the not-so-routine cases, Comcast Business is helping doctors provide care in whole new ways, all working with a new generation of technologies, powered by our gig speed network. Because beyond technology, there is human ingenuity. Every day, Comcast Business is helping businesses go beyond the expected to do the extraordinary. Take your business beyond.
Yes, I'm stuck in the middle with you.
No one likes to feel stuck, boxed in, or held back, especially by something like your cloud. It's a problem, but the IBM Cloud is different. It's open and flexible enough to manage all your apps and data securely, anywhere, across all your clouds, so it can help take on anything, from rebooking flights on the fly to restocking shelves on demand, without getting in your way.
Be My Valentine. Diamond earrings just $69. Stackable bands $129. 3-stone rings $169. Half carat $499. 1 carat $799. And 1 carat studs $599. Thousands of items guaranteed to appraise for double. The Jewelry Exchange Direct.
Welcome back to Worldwide Exchange. Let's get a check on some of the big stocks on the move so far this morning. You've got Sony's third quarter profit falling 20%, but it still beat forecasts. Strong sales of its image sensors for smartphones helping to offset a decline in the company's video game business as consumers wait for that new PlayStation 5 console later on this year. Sony is also raising its annual profit outlook, but net we're down about 2/3% on that trade. Now, BP's fourth quarter profits fell 26% on weak oil and gas prices, but that still topped analyst estimates. Shares are rising as the company's raising its dividend, all on the last day for CEO Bob Dudley, who hands over the reins to Bernard Looney tomorrow. Those shares up 4.5% in the European trade. And then we'll end on NXP Semiconductors, lower today, even as the chipmaker reported better than expected fourth quarter profits and revenues. The company's first quarter revenue outlook is slightly higher than analyst estimates, and it says it's confident demand trends are starting to moderately improve. Those shares off 1.75% in the extended trade. Well, straight ahead on the show, we're breaking out the earnings scorecard for big technology. Today's judge is Gene Munster. His take on Tesla, plus the FANG stocks on the heels of the disappointing Alphabet report coming up when Worldwide Exchange returns after this.
Years go by too fast. I can't keep track.
This is the age of expression. Everyone has something to say. But in a world full of talking, shouldn't somebody be listening?
So, let's talk.
We are Edward Jones. With one financial advisor per office, we're built for hearing what's important to you. One-to-one. Edward Jones. It's time for investing to feel individual.
How do you think I want to change their tires? How are you popping me? Got it. How do you even like doing homework? How does it know where to go? What's up, Mom? Are you serious? You got my tickets now? How do you get tickets?
Read yourself past the junk, past the hashtags and the troll armies, the partisan pandering, past all the social media that's making your head feel like, past the gossip mags and millions of stories uploaded each day. Read yourself past the algorithms, because no one ever did anything big by reading small.
Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Winter joggers of London, it's chilly. Your legs are caked in mud and your nose is running faster than you. Then, get that heating on. You deserve it. Thanks to Hive Active Heating, you can control your heating wherever you are with a tap of the app, which could save you up to £120 a year by never having to heat an empty home. Buy today and get a free Amazon Echo Dot. Search Hive Heating. Hive services require broadband and Wi-Fi. Terms apply.
And welcome back to Worldwide Exchange. I'm Francis Rivera with your news headlines. President Trump is set to give his State of the Union address tonight. This will be the second time in history a president will be delivering it while the Senate is holding an impeachment trial. The Senate will convene today to discuss their positions on the impeachment trial, and then a final vote is scheduled for tomorrow at 4 p.m. Eastern. Senators are expected to acquit the president. Conservative radio host Rush Limbaugh making a stunning revelation about a serious health battle He revealed to millions of listeners that he has been diagnosed with advanced lung cancer. He says his only symptom so far is shortness of breath, but will be stepping back from the show while he undergoes treatment. Limbaugh hopes to be back on the air Thursday. The Federal Aviation Administration is planning to craft new safety standards for unmanned drones. This has been the biggest step yet towards eventually authorizing mainstream delivery of packages by drones. Under the new standards, the FAA certifies the design and the reliability of drones, similar to how it determines the safety of gliders and other light aircraft. The agency's plan boosts efforts by Amazon and other companies seeking to gain approval for drone use. And those are your headlines. Dom, we send it back to you.
All right, thank you very much, Francis Rivera, live in New York with the latest there. Still to come on the show, we are live in Beijing, where China races to slow the spread of that deadly coronavirus, which has now taken the life of a second person outside of mainland China. Plus, that developing story in Iowa, throwing a wrench into the 2020 presidential race. A live report when Worldwide Exchange returns right after this.
Love the new MyWW program because it's tailored to you. Take the personal assessment and get matched with a proven weight loss plan. Find out which customized plan can make losing weight easier for you.
MyWW. Join today with the WW Triple Play.
Fun fact, 1 in 4 of us millennials have debt we might die with. And most of that debt is actually from credit cards. It's just not right. But with SoFi, you can get your credit cards right by consolidating your credit card debt into one monthly payment. You can get your interest rate right by locking in a fixed low rate today. And you can get your money right with SoFi. Check your rate in 2 minutes or less. Get a no-fee personal loan up to $100K.
Doing the things we love can be painful. Aspercream works to relieve those aches and pains. Aspercream's triple effect provides targeted relief, works in minutes, lasts for hours, so you can keep doing what you love. Love hurts. Aspercream works.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen. Healthier brain, better life.
Whether you've enjoyed the legendary terrain in Telluride, the unparalleled landscape of Park City, or the famed peaks of Whistler, you face the hassle of lugging your gear through the airport. With Ship Skis, you're just a few clicks away from having your skis, snowboard, and luggage shipped from your doorstep to your destination. With unrivaled pricing, real-time tracking, Ship Skis delivers hassle-free. Ship ahead and go catch those first tracks on fresh snow. Ship Skis, your skis delivered.
Rally on as stocks look to add to yesterday's gains amid apparent waning fears over the coronavirus. Shares of Tesla also on the move this morning again, following its biggest one-day gain in 6 years. We're breaking down if that stock still has room to run. And caucus chaos in Iowa as results from the first 2020 presidential nominating contest are delayed. The second half of Worldwide Exchange is not delayed. It starts right now. Welcome back to the show. I'm Dominic Chu in this morning for Brian Sullivan. Let's see how stock futures are looking halfway through the 5 a.m. Eastern Time hour. As you can see, the Dow Jones is going to open up by about 323 points. We're near the highs of the session right now. If these gains hold into the opening bell for regular cash equities trading, the S&P would open up by 34 and the NASDAQ up by about 97 points. Strong gains trying to rebound again from those big sell-offs from last week. Now, investors are looking to add to yesterday's gains after Friday's broad-based sell-off. The Dow, though, still needs 459 points to get back what we lost in that Friday rout. Remember, the Dow was down 603 points on that Friday sell-off there. The bond market also a big focus here. We are seeing a little bit of a tick higher in yields. The 10-year benchmark U.S. Treasury note yield is currently just about 1.577%. The 2-year benchmark note yield just a hair below 1.4%. So you can kind of see there just about 17 to 18 basis points difference between those two. We are now also watching what's happening with oil. Trading near its lowest level since January of 2019. At one point, it briefly dipped below $50 a barrel for WTI crude, but you can see here 1.33% gains, $50.77 the last trade there. Still trying to get back from some of those lows. You can see over the last week, we're still down 5% for U.S.-based benchmark crude prices. Stocks bouncing back in Asia as well. As you can see there's green across the screen. I don't see a speck of red anywhere. The Hang Seng in Hong Kong up by 1.25%, similar percentage gain in mainland China for the Shanghai Composite. The Nikkei in Japan up by about 0.5%. Now, if we spin that globe over to what's happening in Europe, you're going to see the same thing. Lots of green across the screen. The CAC in France, the FTSE 100 in the UK, and the German DAX all posting gains of better than 1% at this stage. So yes, stocks are set to surge again around the world. Now to the latest in the global outbreak of the coronavirus. Hong Kong has confirmed to CNBC that a 39-year-old man has died, marking the first death there in connection to that coronavirus, just the second death outside of mainland China. Meanwhile, hospitals in Hong Kong are cutting services as medical workers strike for a second day today. They're demanding the border with mainland China be completely shut down to stop the spread of the virus. Officials in China have revealed there have been another 65 deaths and more than 3,000 new cases of the virus there. So that brings the country's total to 426 deaths and more than 20,000 confirmed infection cases. Now, in Macau, officials have announced that casinos will be closed there for 2 weeks, halting that driving force behind the city's economy as it confirmed its 10th case of the virus. Remember, Macau, a huge gambling hub. And Hyundai says it plans to gradually suspend operations at its South Korea factories beginning today until next week due to the virus disrupting supplies of vehicle components. CNBC's Eunice Yoon now joins us from Beijing with the latest. And Eunice, as we talk about the impacts there, take us through what exactly the government is saying and how exactly they are responding given this latest update on the number of infected and dead.
Well, Dom, it's obviously a very, very challenging time, and businesses throughout the country are really struggling. People have been working remotely from their offices. Factories have been closed. But for companies such as retailer JD, they have the added challenge of having to continue to deliver when so many people are staying at home. For example, right now I'm at a JD delivery station. This station has been operating every single day throughout the virus outbreak. And in fact, the number of couriers here have been continuously delivering, on average, 150 packages to the residential compounds in this area every single day. And then these days, it's actually been higher by 30% at 200 deliveries a day because so many people have been placing many more orders. Now, the company has not only been delivering to people throughout the country, but specifically in the outbreak area, the epicenter of Wuhan. Now, obviously, it's a challenge. The company says that they have to make sure that everybody is wearing protective gear. That means hazmat suits, goggles, as well as face masks when they make these deliveries, especially to the hospitals. The company said that because the areas have been so infected, they need to make sure that they're constantly disinfecting. They're putting in a lot of different measures. And one of the interesting things is that there have been so many companies as well that have been donating medical supplies, since medical supplies and especially masks have been so hard to come by. The company said that it has been able to open up a special channel and to deliver, on average, many donations, 600 requests so far from various organizations using their special channel just to get to those workers in Wuhan, Dom.
So Eunice, as we talk about some of the impacts, I mean, businesses, it's not just there in China that are dealing with this. We're also seeing, we just mentioned Hyundai starting to close plants because supply chain disruptions are affecting autos there. It's also around other parts of Asia as well. How exactly are we seeing this play out, not just in China, but elsewhere across Southeast Asia as well?
Well, because the supply chain here is so integral to so many international companies, that is one of the key ways in which companies around the world are being affected, because companies are wondering exactly when these factories can open. Is it officially? It's supposed to be next week. There are a lot of companies that I've been talking to and business people who aren't quite sure that business is going to open next week, and a lot of executives who are worried about coming to this country as well. Dom?
All right, Eunice Yoon, live in Beijing with the latest there on the coronavirus. Thank you very much. Well, oil prices are clawing back ground today, some ground at least, on hopes for new production cuts from OPEC and its allies to offset any drop in global demand due to that virus outbreak. Despite those gains, oil prices are still hovering near bear market territory, down about 20% from their peak back on January 8th. BP saying today the coronavirus could reduce demand by up to 0.5% this year. Let's get some more insight here from Claudio Galimberti. He's the head of demand, refining, and agricultural analytics at S&P Global Platts. And Claudio, I just remember so many estimates coming now about what oil is going to do, given the fact that China is one of the biggest consumers and importers of oil out there. Is this going to have an effect on the oil market?
Good morning. Yeah, we indeed look at a huge impact for the oil market due to this virus outbreak. We know that China is a very large consumer of oil, a very large importer of oil. We have developed a best case scenario and a worst case scenario. In the worst case scenario, we are looking for an oil demand reduction just in the month of February of 4 million barrels a day. This is going to be a very huge impact. In the best case scenario, we are still looking at a oil demand reduction of 1.6 million barrels per day. So it's very significant, and the market is reacting to this demand destruction right now.
So Claudio, let's kind of put this in perspective from your side of things. We've already seen a steady, and maybe not even steady, a pretty precipitous decline in oil prices, not just U.S. benchmark, but world benchmarks as well. How much of that scenario, or how much of it is already being priced into the market? Is it tilted more towards the worst case at this stage, or is there still a long way to go for oil prices down if the worst stage really does come to fruition?
That's a very good point. That's a very good question. What we know for sure right now is that the transportation lockdown in China is having an effect. The flight cancellation is having an effect. I don't think we are yet at a point we can say this is the worst case scenario. As a matter of fact, I would say the worst case scenario would play out if China is not able to go back to work, business as usual, next week. That would be a signpost that we are going towards more the worst case scenario. So far, what I would say is that we are more towards the best case scenario, and the Brent, so the international benchmark at $55 per barrel, is pretty much a fair price right now with the numbers of the best case scenario.
Claudio, before we let you go, just a few moments left here. Let's talk about what data points you will be watching, economic or otherwise, that will make you change that model or that projection.
Definitely, we need to look at the expansion of this virus. The reporter from China earlier was making the point that we could have global reverberation in terms of the global supply chain, not just oil. If that is the case, so if we're looking for a persistent lockdown in China, that will have economic reverberation and therefore oil demand reverberation throughout not just this quarter, but even the next quarter. So what I'm really looking at is the pace of spreading of this virus. Right now we are at 20,000 people infected. If this goes on and on, not just in China, but the rest of the world, then we are going back to the drawing board, and our numbers will change accordingly.
All right, Claudio Galimberti, thank you very much. S&P Global Platts with that outlook for oil prices given the coronavirus. And please be sure to tune into tonight's CNBC special report on the coronavirus outbreak. It's 7 p.m. Eastern Time, right here only on CNBC. It's the place you want to go for everything you want to know about the coronavirus. Well, back to some major movers this morning. Shares of Tesla coming off their biggest one-day jump since May of 2013, soaring more than 19% in a single day after a very, very bullish analyst upgrades and news its joint Panasonic battery factory turned a profit for the first time ever. Now, that profit helping lift Tesla's entire Asian battery supply chain overnight. You've got names like LG Chem, also Samsung, SDI, SK Innovations, and more, adding nearly $9 billion worth of market value. As you can see there, a lot of battery operators and providers very much in the green. Also now watching shares of Google parent company Alphabet, the company beating profit estimates for the fourth quarter and matching on revenue estimates, but bigger than expected losses in its other bets and slowing growth in its ad business, giving investors some reason to pause and sell this morning. Joining me now on all of this and more, Loop Ventures managing partner Gene Munster. Gene, good morning to you. And I got to say, this is an interesting point. We've got a market that's in real rally mode, despite the fact that a company like Alphabet has provided such a disappointment. Were you as disappointed in those Alphabet earnings as the street seems to be?
I was, and ultimately is that these big tech names have the flywheel of an install base. In Google's case, you have a couple billion people use it every day. You'd expect that this sharp decline in revenue growth, you hit it right on. Last quarter, they grew their ad revenue, which is 83% of the overall business, at 22%. In the December quarter, that decelerated to 16%. Analysts were expecting that to be 18% growth. And so even though that seems small, as analysts adjust their models for the next several quarters, that impact obviously is compounding. And instead of having, let's call it a 15 to 20% growing story, you have a 13 to 16% growing. And that impacts how I think people should look at this. If you step back and think about the FANG results, and Google put that in the context, is really Facebook and Google, the two ad plays, were faced with some headwinds. So in some respects, well, I was surprised. Maybe we should have seen some of the writing on the wall after the Facebook results earlier in the quarter.
So Gene, let's talk about whether or not, I'm trying to figure chicken or egg here. Do we glean something about the overall health of the ad market based upon Facebook and Alphabet results? Or do Alphabet and Facebook results tell us something about what's going to happen with the macro market for advertising revenues?
I think it's more the latter. I think that this is a better indication of the macro market. Ultimately, these are the two bellwethers. If you are an advertiser and you want to get reach, you have to really spend on Google or Facebook. And so I think that what they're seeing in their ad business is more representative of what's going on in the overall advertising market. I'm not a believer in Facebook. I don't think Facebook necessarily puts the world in a better place. But the more I've studied what advertisers need in terms of reach and targetability, I think that there is no other place to go. And so I do think that these are bellwethers relative to the overall ad spend market. Before my comments maybe are taken out of context, I think it's important that even though these are decelerations and it is a disappointment, it still is healthy growth. We're still talking about mid-teens growth in the case of Google and higher for Facebook. So big picture, it's a deceleration, but I think the overall ad market remains healthy.
Tesla, a huge focus here, just a few moments left here. Can you take us through what you feel about these? I mean, it's just, I can't even describe it. I don't know what's happening here.
I can't either, Dom. been covering stocks for a long time, and this is really unprecedented. I think at the end of the day, what we're seeing is a shift from people viewing this as a car company, using Ford and General Motors as comps, is quickly thinking about this as a tech company. I just want to put some quick perspective on where this could go with Tesla. Is that their real business is a computer on wheels. It's a combination of hardware and software, similar to what Apple is, combination of hardware, software, and services. If you apply a 20% growth rate on Tesla for the next few years and give a similar revenue multiple as Apple, that equates to $360 billion market cap. The current market cap of Tesla is $140 billion. In other words, I agree with you. I'm glued to the screen yesterday watching the movement in Tesla stock, but the reality is that if they're successful at capitalizing this undeniable truth about electrification and autonomy, the stock has much higher to go.
42% gains in just the last week alone. Gene Munster, we'll have you back because you got to break it down for us again. Gene Munster, thank you very much.
Thanks, Tom.
All right. Well, later on this morning, don't miss longtime Tesla investor Ron Barron. He's going to be live on Squawk Box, 7 a.m. Eastern Time. He's got to be loving what's happening with that stock right now. We'll see if he's still as bullish. Well, coming up on the show, much more on Tesla's meteoric rise and the
Imagine traveling hassle-free with your golf clubs. Now you can with ShipSticks.com. No more lugging your clubs through the airport or risk having your clubs lost or damaged by the airlines. Sending your own clubs ahead with ShipSticks.com makes it fast and easy to get to your golf destination. With just a few clicks or a phone call, we'll pick up and deliver your clubs on time, guaranteed, for as low as $39.99. ShipSticks.com saves you time and money. Make it simple. Make it ShipSticks.
Exploring the heart of historic Europe with Viking, you'll get closer to iconic landmarks, to local life and legendary treasures as you sail on board our patented, award-winning Viking longships. You'll enjoy many extras, including Wi-Fi, cultural enrichment from ship to shore, and engaging excursions. Viking, voted #1 river cruise line by Condé Nast readers. Learn more at vikingcruises.com.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
As a struggling actor, I need all the breaks that I can get. At Liberty Butchamug.
Cut.
Liberty Bibbity.
Cut. We'll dub it.
Liberty Mutual customizes your car insurance so you only pay for what you need.
Only pay for what you need.
Liberty, 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 Liberty.
Make fitness routine with Pure Protein.
High protein, low sugar, tastes great.
High protein, low sugar, so good.
High protein, low sugar. Birthday cake.
And try Pure Protein delicious protein shakes.
All right, to the markets now. Stocks trying to add to yesterday's gains after a walloping on Friday. So what exactly do the charts say as we kick off February trading? Joining me now on the CNBC Newsline, oh, not really on the Newsline. He's actually here in person. He's here in person. It's Mark Newton. This is huge. We're going to get back a lot of the losses from Friday. Let's take us through some of the charts that we are watching. First of all, I have to ask you, because we just talked to Gene Munster, Tesla.
Yeah.
What can you even say about the charts right now? I don't even know if there's anything that you can put level-wise to that kind of a chart.
It certainly has started to grow a lot more parabolic just in recent weeks. And so, the stock has been up, I think, over 40% just in the last week alone.
This is a straight line higher.
Yeah, interestingly enough, it's gotten pretty overbought. So you take a look at, just the chart going back over the last few years. That was a very important breakout of really a multi-year level of resistance that had been held for quite some time. So this is often a time when people really want to step in and buy the stock. And now currently at 807, momentum has gotten to levels that were last seen a few years ago, obviously, where RSI now is up over 80 in terms of a range between 0 and 100. Some people look at the relative strength index back in 2013, back in 2017. It reached similar levels of overbought. That doesn't mean necessarily it's an immediate time to run out and sell. Most technicians would simply say, you know what, trends are simply going up. You want to wait until at least the stock can make a low under the lows of the last few days, at least under a new weekly low, before you can say that, okay, we're going to see at least a minor pullback. For right now, it's pure acceleration higher. So it's tough to step in and sell this stock. Everybody's given a million reasons that why the stock is not worth this much. It should pull back. All of a sudden, people are slowly but surely coming onto the bandwagon saying, okay, now the stock is starting to just move and accelerate, and now maybe I missed it. Now, is it time to get on? But in general, I don't favor buying the stock for any more than, literally a few days at this point. I think it might get to 900, maybe it gets to 1,000. Who knows? It's not for me as a technician to say. I can say, the trends are obviously strongly to the upside. You want to hold off before trying to short the stock. Let the stock show you that it's ready to pull back, not make any line in the sand and I'm going to sell it now.
All right.
Energy next.
Let's take a look at energy, because this has been a value trade. It seems attractive for some people out there. So are you a buyer of energy right now?
You know what? It's tough for me to buy energy. We need to see some evidence of stabilization. The chart on XLE, just going back over the years, this should be a really important area for the index, potentially to hold. XLE, of course, having a lot of the bigger names, Exxon, Chevron, right down to former lows right here. It's actually getting under these prior lows that we're seeing last fall. So really, we're at the lowest levels we've seen since really over the last year. This is going to be an important level. Today, we're seeing a little bit of stabilization in crude oil. I don't favor big bets on energy right now until we see at least a little bit of stabilization in the price of crude itself. We've come down a long way in a very short period of time. If we get down under XLE right now is right around, 60, right near the low 60s, high 50s. So anything under there, you honestly could move down to the lowest levels we've seen since 2009, and that wouldn't be unexpected potentially.
All right, and then before we let you go, we've been speaking a lot about how there are not really stresses right now in the credit marketplace, but you are seeing some signs right now, right?
Well, some of this could be energy related. We saw that before in 2016 when crude really started to fall dramatically into those lows, and that affected credit spreads. And so this is just a ratio of really LQD, which is investment grade corporate ETF, versus the spread
for high
of
yield.
HYG, high yield. We started to see more and more evidence of high yield dropping off a few weeks ago, right as the equity market started to turn down. That was a big warning sign. Equities are moving up. High yield all of a sudden started to lag. So we're now breaking out of this entire trend over the last decade. So for me, that's interesting, and it means that we are starting to see a little bit of stress and credit.
All right, the charts are telling us a lot of stories. Mark Newton, always great to get your thoughts on this.
Thanks, Don.
And
great
of
to
course,
be
your
here.
artistic ability as well. Thank you very much. Well, coming up on the show, a rocky start for the Democratic Party's road to the election. We're going to go live to Iowa, where we still don't have a winner in the state's Democratic caucus. And a reminder, you can always watch or listen to us live on the go on the CNBC app. Worldwide Exchange is back in just a moment.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Lucid. Legendary investor Ron Barron shares his bullish vision for Tesla and confidence in Elon Musk's magic touch. Today, 6 a.m. Eastern. Watch or listen live on the CNBC app. Sarah Eisen, Wilfred Frost. Closing bell weekdays 3 Eastern, CNBC.
From Brooklyn, New York, the most influential voices disrupting the next decade of work. April 1st and 2nd, CNBC's At Work Summit presents insight from top business leaders, helping you empower the modern workforce, boosting productivity and the bottom line. To register now, go to cnbcevents.com/work.
Welcome back to the show. Democratic officials in Iowa are reeling from the debacle over the voting results from the first of the 2020 presidential nominating contests. Party officials have told the presidential campaigns they expect to release the results from yesterday's Iowa caucus later on today. CNBC's Kayla Tausche joins us now from Des Moines, Iowa. Kayla, what exactly happened to give us this confusing ending to this first contest?
Confusing and frustrating, Don, the morning after for campaigns and voters to still not have results after what the Iowa Democratic Party called quality control issues with the transmission of data from 1,700 caucus sites to the party. There were multiple sets of data. They were using a new app to transmit this data. Last night, the Iowa Democratic Party releasing a statement saying this is simply a reporting issue. The app did not go down, and this is not a hack or an intrusion. The underlying data and paper trail is sound and will simply take time to further report the results. Now, certainly many of the campaigns are already claiming some form of victory. Bernie Sanders' campaign put out its own data from 40% of precincts. This is the internal data from the Sanders campaign, and they say, according to that impartial, imperfect data, that Sanders would be victorious. Close to 29% of those voters reporting. Pete Buttigieg right behind with about 25%. But then the Buttigieg campaign also says that it emerged from Iowa victorious. Many of these campaigns, Dom, have already headed to or landed in New Hampshire. They will refocus and redouble their efforts after spending the bulk of time over the last several weeks here in Iowa with, as of today, not much to prove for that.
All right, Kayla, stick around because we've got a lot more to talk about this. Let's bring in Tony Fratto, founder of Hamilton Place Strategies. He's a former White House deputy press secretary under President George W. Bush. Kayla brings up a lot of interesting points about the confusion happening right now. We have entrance poll data, but no official results. I'm just looking here. Kayla mentioned some of the numbers, but according to NBC News' entrance poll results from late last night, it is Biden at 27% for the chosen candidate. I'm looking at Buttigieg at 20, 12 for Warren, and 11 for Sanders. But that might not be even close to what actually happens.
Yeah, it just tells you how what bizarro world Iowa is. Where every other state we're talking about exit polls. In Iowa, we talk about entrance polls, talking to people walking into these gyms, and it is a bizarre process to begin with. This conclusion, or not yet a conclusion, we hope by later today we'll have the results. It's pretty chaotic and doesn't really help any candidate. So it's upside down from the results that we're seeing. Biden has the most to lose here. He really needs to perform well here, and there's no evidence of that yet that he has.
So what does this mean then for Joe Biden if this Iowa doesn't pan out the way that his campaign expects it to?
He really has the most to lose, right? People expected Sanders to probably pull this out in Iowa. He's a favorite son going into New Hampshire, so people kind of expect him to win New Hampshire. Biden can't drop out of that top group. And look, if Buttigieg, Warren, and Sanders are forming that top group and Biden isn't in there, money's going to dry up for him. It's going to be hard for him to continue.
Kayla.
Dom, I want to mention something about Biden because the strategists that I talked to say that a lower tier finish by the former vice president would essentially be exactly what Michael Bloomberg is looking for his path into the race. As a moderate, as someone who policy-wise is not too far off from Biden, if Biden were to come away from Iowa victorious, then I think that the Bloomberg campaign would look at that and see that as a difficult indicator for its path forward. You did have some anecdotal data from some of the larger caucus sites in Cedar Rapids and Des Moines, where Biden was not a viable candidate in the first round of alignment for these voters. And so they were realigning themselves with other candidates. But the reporters who are embedded with the Biden campaign said that his strategy was actually to focus on more of the rural areas where the TV cameras weren't and where we just simply don't have that anecdotal data. And it's impossible to know how that data turned out.
All right. So Tony, I mean, Kayla brings up some interesting points with regard to what exactly it'll take for certain candidates to move forward. Yeah. One of the places they have to really address is healthcare, especially in Iowa, because the entrance polls that NBC News put out have healthcare as overwhelmingly the biggest topic of a concern. So what exactly does that mean for the message carrying into New Hampshire?
Yeah, I won't be surprised to see that carried over in some of the other states too. You know, economy's doing relatively pretty fine, right? Trump's going to go and talk, have a strong message tonight on the economy. You know, healthcare is that one issue that's still unresolved. It hasn't been resolved going back to, you know, the Clinton campaign in the early 90s. So they're going to have the candidate who comes through with that message, who can pick up those extra voters, is going to have an opportunity to really challenge Sanders. Like, Sanders has his message on healthcare. His voters are not going anywhere. You know, Kayla is exactly right. You know, the candidate who can be the alternative to Sanders and pick up those votes is going to be the one who's going to be going into Super Tuesday and have a chance. It very well could be Bloomberg. She's right that chaos helps Bloomberg in this. You know, if no one comes out of these first 3 or 4 primaries without momentum, Bloomberg is going to be the beneficiary.
All right, Kayla, we're going to give the last word to you here. Let's talk about what this means for New Hampshire. How does the strategy change, and what will be the focus there as opposed to what happened in Iowa?
Well, we haven't really seen what the candidates' strategies are exactly in New Hampshire. They've only spent a couple days here and there compared to the resources that they have plowed into Iowa. It is certainly a state where Bernie Sanders has the home field advantage. Income inequality is one of the top issues there. But it's also a state where President Trump has a ton of support. Trump will be holding a rally next week in Manchester on the eve of the primary there. And certainly there are some deep red pockets of the state, and it will be a battle later this year.
A battle for sure in the Granite State. Tony Fratto, thank you very much. Kayla Tausche, great reporting from Des Moines, and she's heading out to New Hampshire soon, I'm sure. That does it for Worldwide Exchange this morning. Stock futures are set to surge, and Squawk Box begins, and it happens right now.
Good morning. Chaos in Iowa. Democratic caucus results delayed after the party found inconsistencies and decided to manually verify the votes.
Tesla posting its biggest one-day gain since 2013, bringing the company's market cap higher than IBM, United Technologies, and Lockheed Martin. Longtime Tesla investor Ron Barron's going to be joining us to take a victory lap.
And the number of confirmed coronavirus cases has now topped 20,000. We'll show you how companies are coping with the outbreak, tell you what you need to know if you're planning to travel. It's Tuesday, February 4th, 2020. Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is out today, but joining us, we have Michelle Carusa Cabrera. She's sitting in with us this morning, and it's great to have you back, Michelle.
It's a pleasure. Thanks.
Let's check out the U.S. equity futures at this hour. You're going to see right now there are some pretty strong green arrows across the board. This, again, it looks like we are continuing to build back from Friday's losses after the gains we saw yesterday in the market. Dow was up by about 143 points yesterday. The decline on Friday was down over 600 points. This morning, though, you're looking at those Dow futures up by over 300 points. S&P futures indicated up by over 31 points, and the NASDAQ looks like it would open up by about 90 points here. Also, let's take a look at what's been happening in the Treasury market. We had seen those Treasury yields under a lot of pressure because of the coronavirus and concern about what that will mean for the global economy. This morning, the 10-year yield picking up just a little bit, 1.57%.
Meantime, we'll talk a little bit about earnings as well right now. Shares of Google parent Alphabet, they're lower this morning. The company beating EPS estimates for the fourth quarter and matching on revenue, but bigger than expected losses in what they call their other bets category. slowing growth in its ad business, giving investors reason to sell this morning. The company also breaking out numbers for its YouTube and cloud businesses for the very first time, reporting YouTube ads generated $15.15 billion for sales in its fiscal 2019 and more than $4.7 billion in the fourth quarter alone. We'll dig into the quarter later this hour with a shareholder and an analyst, but you think about those revenue numbers, I mean, it's YouTube on its own is bigger than Viacom. Now, maybe an unfair comparison because so much of the money is actually going to the creators in terms of how they're divvying up that money. But they'd never broken out this. For years, investors have been screaming, please just show me the numbers.
Because they knew it would be significant.
It would be significant.
I'm just not sure anybody realized just how significant.
I think given, though, how poor this particular quarter was, not that this was if you're going to start disclosing, you have to make a decision you're disclosing.
Well, yeah, you can't take it back at some point.
You can't take it back, but I think you disclose in part to demonstrate, look, maybe the earnings over here aren't what people were expecting, but if you start to get granular, maybe you'll be more excited about the story in the future.
Look,
some people call that a hide-the-ball distraction, too.
Well, we talked yesterday about how younger generations are consuming media. And I was saying, like, our teenagers watch YouTube constantly.
Like it's TV.
Instead of TV. Instead of TV, that's what they're watching. It's kind of what they've grown up with, what they're used to. They'll watch anything from cooking to makeup tips to anything along the line. Singing. People singing and making up songs.
When you look at the results and how some people appear disappointed and some investors disappointed because of the still spending on the other projects.
Right.
But the idea was that all the new cloud revenue and the fast pace of the cloud revenue was supposed to offset those concerns.
Right.
And yet we see some disappointment in the shares. It just wasn't good enough.
So I want them making the other bets. I mean,
You're not a shareholder, so who cares?
I mean, that's an entirely different discussion. I'm surprised at the stock reaction, which is, people are supposed to be not worrying about what those things are costing because all this other stuff is making so much money.
That tells you what's happened to their shareholder base and the expectations that they have coming into this. Because the same thing, for years and years, Jeff Bezos was very clear from the very beginning when he started Amazon that I'm not in this to turn a profit right now. I'm in this to build a bigger and bigger thing. And investors, it's basically you get to pick who your shareholders are. You got to be very clear about messaging that to them. This tells you a little bit about who's in the shareholder base right now. But if that's what they want to do, if they're clear about messaging this, then the shareholder base turns over. You're either with them or you're not. There's the shares right now. They're down by about 3%. Because it's such a big stock, with a high stock price, that's a decline of $45, and that does make you sit up and take notice. Also, let's talk about shares of Tesla coming off their biggest one-day jump since May of 2013, soaring more than 19% in a single day after a very bullish analyst upgrade, and some news from its joint Panasonic battery factory that it turned a profit for the first time ever. We're going to talk to longtime Tesla backer Ron Barron. That's coming up at 7 a.m. Eastern Time. What's crazy about this story is that stock was up 20% yesterday. It looks like it's indicated up another maybe 3% this morning.
I know it's talked about all day long on CNBC, but GM sold 8 million cars in 2018. Ford sold 6 million in 2018.
Right.
Tesla's just getting to 367,000 last year, and yet its market cap
is bigger than GM and Ford combined.
Yes. I mean, clearly people have incredible expectations about where this thing is eventually going.
Right. Well, we'll talk to him today. Look, he's weathered it through some downturns in the stock when you saw some of these things, too. And there is certainly the bull-bear case, but right now the bulls are winning, no doubt about it. Like, the stock is taking off.
Meantime, we've got some drama in Iowa. If you were thinking you were going to wake up and we'd have some results for you, which we were anticipating, the results of the first in the nation caucus, they have been officially delayed after the Democratic Party said it found inconsistencies in the returns and would then go manually verify data from all precincts. A party representative now blaming a reporting issue, and the state's party chair said results will be released later today. It's verifying that digital results submitted on a new smartphone app match 2 sets of hard copy backups. Some of this could be an app issue now. Sources telling NBC News that the state party hosted a heated conference call with campaigns after 11 p.m. Eastern, but the party leaders hung up as campaign officials pressed for more information. So
I guess there isn't an app for that.
There is not an app. There's not an app for that. We have numbers that crawl across our screen all the time. Results.
Right.
Real time. There's nothing. We have nothing to show. We just have zeros.
Apparently, this was an app that was just put together in the last couple of months. It
A
was,
group called Shadow.
Right. It was kind of pushed by the National Party when they said, you've got to find a better way to come up with this, but it was not tested on a statewide basis.
And there's controversy because they haven't revealed exactly who was the creator, and there's been concerns from cybersecurity firms about the testing of it.
Meantime, we do have somebody who may actually have the results. His own results, at least. This is joining us right now, is pollster and political strategist Frank Luntz. What Iowa cannot bring us, Mr. Luntz may be able to try. Frank, what do you know?
I wish I could. We interviewed about 50 people yesterday, before, during, and just after the caucuses. And I can tell you today that there are some very angry, some very depressed people. And I'm not going to take cheap shots. I myself said last night, if you can't run a caucus, how can you run a country? But this morning, this is very bad. Hundreds of thousands of people came out to vote. They came out for 2 or 3 hours. They exercised their democratic responsibilities. And they wake up this morning and there are no votes at all. We've been hearing for years now about voter suppression. We've been hearing about voter fraud. This is worse. It's as though no election took place yesterday. And I cannot emphasize enough, no cheap shots this morning, but be very, very depressed that our democratic system failed last night. We wake up this morning with no votes counted. We wake up this morning with no winners, no losers, candidates that are frustrated, and voters that simply wonder, does our democratic system actually work anymore?
So, Frank, let me ask you a question. Assuming we get a tally later this afternoon, how consequential is the delay?
It's
how consequential will it be in terms of the country and Iowa's and the Democratic Party's view even of the numbers themselves?
It's significant. And remember, in the end, it's really not about the candidates. It's about the voters. It's about the people who participate. And they're going to wonder. They've heard about Russian hacking. They've heard about all sorts of voter failure. We go back to the year 2000 when we had essentially a tie in the country. And they look at this and they wonder, in the year 2020, why does our system still fail? And all this doubt, and you know this is going to be played up not just nationally, but globally. The world was watching last night. People came out expecting to have winners and losers. And they operated we were at 4 caucuses last night. And people understood the process, moving from candidate to candidate as time went on, so the candidates could be, and I quote, viable, unquote. And then they find out that those votes aren't tallied. They find out that it's almost like it didn't matter. Now, yes, we will have votes later today, but a lot of people aren't going to trust them. Some candidates are going to claim voter fraud, but the voters themselves are frustrated and they're angry.
Frank, the system in Iowa is hardly traditional or emblematic of what happens across the United States. Is there any chance that this caucus system in the state, which they defend and have historically defended as being incredibly democratic, but from the outside seems incredibly problematic sometimes, and we're seeing it now, any chance that this system will change in the state after this?
There is a chance, and I've met with a number of Democratic officials in the state over the last few weeks in the states, not just Iowa, who believe that this is not representative of the country, who believe that Iowa is not representative of the Democratic Party. I know that I looked around last night at a number of different caucuses, and it wasn't representative of the typical Democratic gathering. However, Iowa voters take their responsibilities seriously. They meet with multiple candidates. When I've asked the question, how many of you have met a president, not just a candidate, but a president, 1 out of 4 raised their hands. You can't find that in any other state except for New Hampshire. These voters are serious about the choice that they make. They're serious about knowing all the candidates. So that's the best defense. But if you can't count the damn votes, if you can't get a system that actually works out here and reports the efforts of hundreds of thousands of people, then you know what? Then you lose that responsibility. You lose that right to go first.
This is the government officials don't have any oversight over this, national government officials.
That is correct. This is strictly a partisan matter, and they have really let the voters of Iowa down today.
Frank, you know, this is very interesting because there's a huge push within the primary system for what they call tiered voting, right? Which is, okay, you go out and you vote, and you actually rank. It's rank voting, right? This is my first choice. But if my first choice doesn't get enough votes, this is my second choice. This is my third choice. And they're talking about that, for example, here in New York City. And already the Board of Elections folks are saying, hey, if we do this, you don't wake up the next morning and know what happened. It could take days before we know what happened. Basically in Iowa, what you have is live, dynamic, in real time, ranked voting. Is that part of what the issue is here? And if we start to see ranked voting across the country, could we have a similar delay in results?
You still should not. They have ranked voting in Maine, and it did take a little bit longer. But if the process works and the voters do what they're supposed to do, which they did happen, this is not the fault of the Democrats, of the actual voters in Iowa. This is the fault of the people who supervise it. And quite frankly, the people who did the technology ought to know better that this is going to destroy the confidence that people have in using technology, in expanding the ability, the rights of more people to vote. So yes, this does make it more complicated, but in the end, they have ranked voting in other countries, and it works there. Why did it not work here? People should be asking that question, and frankly, they should be outraged.
Frank, all fair questions, frankly, it's reasonable. Frankly, it's reasonable to be outraged. My question to you is, if you had to give us the numbers in terms of what you estimated based on the interviews that you've done, based on the polling that you've looked at, where do things stand right now?
So I am going to go out on a limb. I think that when all the votes are counted, and now you're going to be able to hold me accountable, I think Bernie Sanders will win narrowly. Now remember that there are several different ways that they are counting those votes. I was very impressed with the Sanders campaign and how well organized they were at the caucuses that I attended. But there was clearly support for Mayor Pete as well, and I think he's going to do well. The question everybody's asking is, how well did Vice President Biden do? Last night at his victory party, people were loud, they were expressive, and the room was packed. But in the Des Moines area, I can tell you that Joe Biden did not do as well as he might have in other parts of the state. And people are wondering, did he finish third or even possibly fourth?
Hey, Frank, just really quickly, with all of this confusion that has kind of worked its way into the process here, what do you think that this means for the national election when there's some Democrat up against President Trump?
I think it means that we're going to trust each other less. I think it's going to add to the acrimony. Faith in the democratic process is going to sleep. Republicans are going to say, you see, Democrats, you can't even run an election in Iowa. How are you going to run the country? And Democrats are going to say to their own people, get your crap together. I'm very careful this morning not to use any word that gets either you or I in trouble. But I cannot emphasize enough to the viewers who are listening right now that there are going to be hundreds of thousands of really pissed off people right now, and that the people who ran this election are going to be held accountable. But we have New Hampshire in 6 days, and 6 days from now, everybody will forget what happened here in Iowa.
Okay. Frank, it's good to see you this morning. We appreciate your perspective and your outrage. We look forward to talking to you soon and seeing how your predictions and whether your predictions come true. But we'll talk to you soon. Thank you.
When we return, stocks surging this morning despite a rise in confirmed cases of coronavirus. We will take you live to China for the latest on how companies are responding to the outbreak next. Check out the U.S. equity futures, up handily this morning, actually continuing to build. Dow futures now indicated up by about 330 points. S&P futures up by 34, the NASDAQ up by 97. We'll be right back.
This CNBC program is sponsored by Baird, a strong financial partner for 100 years.
Interactive Brokers pays 1.06% on idle cash in your brokerage account. Do you know what your broker pays? Most U.S. brokers offer nominal interest in their brokerage accounts. Move your account to Interactive Brokers and start earning interest.
we're going to need 500 more units pronto.
We don't have that kind of money right now, Carl.
You will in 10 minutes. That's how long it will take you to get funding through Cabbage. I know. I'm 10 minutes in the future spokes guy.
Cabbage. Business funding in as little as 10 minutes.
What's happening?
Whether your beauty routine is 3 steps or 57, make Nature's Bounty Hair, Skin, and Nails Step 1. It's the #1 brand uniquely formulated for silky hair, glowing skin, and healthy nails. Look for our coupon in Sunday's paper.
It's time to change the way you think about money. CNBC and Acorns has the answers to your money questions. Concerned about being a reluctant investor? Want to start saving for retirement? Personal stories, money tips, strategies for saving and investing, financial game plans you can put to work right now. The smartest money moves to reach your goals. Invest in you. Ready, set, grow. CNBC and Acorns. In you.
If you're a growing business, be ready when your big moment arrives. One day, you might need to take an online payment at 4 a.m. for a unicorn cake. Or you might need to take lots of payments due to a surge in demand for duck egg blue paint this spring. Be ready with Barclaycard Business. Sign up before the 3rd of April and get 50% off e-commerce rental or card machine rental for 12 months. Search Barclaycard Business and find offers designed for growing businesses. Barclaycard, we take every payment seriously. Subject to application, financial circumstances and borrowing history. T's and C's, exclusions and contract apply. New UK customers only.
I'm Peter Jones. Lifting business performance is critical in today's uncertain times. But how do you keep up with changing regulations and rising demands? How do you break free from manual processes to raise productivity? The answer is technology that elevates performance and comes with industry-leading support. Over 1 million UK businesses, including my investment group, trust Sage to manage their finances, operations and people.
Elevate your business today with our free performance review. Visit sage.com/perform.
All right, welcome back, everybody. An update now on the coronavirus outbreak. A 39-year-old man in Hong Kong has died. This marks the second death from the virus outside mainland China. Hospitals in Hong Kong are cutting services as medical workers strike for a second day. They're demanding the border with mainland China be completely shut. Meantime, the death toll rose overnight to 426, and total confirmed cases have now topped 20,000. Eunice Yoon joins us with more on this. And Eunice, the numbers are starting to really add up.
Yeah, they're definitely adding up, and it really ends up becoming a much more stressful situation for a lot of businesses here that are continuing to try to operate. I'm currently at a delivery station of e-retailing giant JD.com, and this is just one of several different businesses that are finding it challenging to operate because of all the travel restrictions as well as the concerns about public health. Now, at this station, the couriers normally deliver 150 packages to the residential compounds in this area every day. That has surged to about 200 per day because so many people have been placing orders online. Now, the company says that the way they're able to do this nationwide is because they have a lot of technology in place that helps with their logistics. Also, because they own much of their distribution network, their warehouses, et cetera, they are able to become much more flexible when making these types of deliveries. For example, when a road is closed off or a flight is delayed. Also, they've been able to continue to deliver into the most infected areas, into Wuhan, the epicenter of the outbreak. Of course, in this situation, they said they're requiring their couriers to wear a lot of protective gear when just going around the country. It's normally face masks as well as temperature checks. But in Wuhan itself, they said their couriers are wearing hazmat suits, goggles, gloves, making sure that they're totally protected. The one product that it has been challenging still for them to source has been face masks. They have been able to open up a special channel for medical supplies. JD says that their priority at this stage for their deliveries is medical supplies to Wuhan. And they have had some success. In fact, they said that as of February 2nd, 600 requests were made to them to deliver donations of medical supplies. Now, there are signs of further business disruption for the country. One very prominent event which usually happens in March, called the China Development Forum, where and in the past they've had keynote speakers such as Tim Cook. That event has just postponed their gathering. Again, that was supposed to be at the tail end of March. Also, the Canton Fair, which is usually held in April, very important for the global supply chain. Traders come from all over the world. The venue itself has canceled all exhibitions, it says, until further notice. Now, the Canton Fair itself, the organizers said that they can't confirm whether or not the fair is going to be held, but obviously these types of cancellations are making companies nervous here that the impact of the virus on business here and the economy is going to be much greater than previously thought.
Eunice, we just mentioned in the lead up to you that nurses in Hong Kong were going on strike because they're not happy with the border being open with China. How does JD.com convince delivery people to go into hazardous areas, to go to some of the most highly infected areas? How do you possibly entice workers to do that?
Well, a lot of workers for JD as well as other delivery companies are from those locations. So you do have, what's amazing is that, especially in Wuhan, there are a lot of people who are volunteering their time and effort to try to help a lot of the patients and the sick. So we hear lots of stories of people personally driving their cars, taxi drivers deciding that they're going to drive their taxis and grab patients and bring them to the hospital for free. There are a lot of people there, and where you're seeing a great upswell of humanity, really, to try to help a lot of the sick there. And I think with JD, that's a lot of the workers. I mean, obviously they get paid as well, but they take those protective measures of having to wear the hazmat suits. But there are people who are willing to do this work.
And every day we're getting more and more indications of just how global the impact is, Eunice. Just in the last hour, Cathay Pacific came out and said that they were cutting capacity by 30% due to lack of demand, one of the biggest airlines in the world. And clearly, we've seen the impact on the American Airlines, where they've just decided they're not going to fly there at all. But even within the Asian airlines, just obviously there's a dramatic reduction in demand in the desire to move around until this is cleared up.
Yeah, absolutely. I mean, it's hitting travel, also tourism. And you guys were just, talking about it a little bit earlier. I think Macau also is going to be hit hard. The chief of Macau